Good morning, good morning, good morning, good morning. Oh, the market is most definitely crashing. It remains to be seen if that's a good thing for AMC. Technically speaking, movie theaters do better in a poor performing economy.
There's that crash I've been waiting on.
DRV over $83. Wow. Let's give people a few moments to trickle in here. Thank you guys for joining the live stream. If you wouldn't mind, just as a courtesy, please drop a like as soon as you come in and consider sharing the link around on Twitter and other social media feeds just to get the crowd rolling in. How is everybody doing this morning? Hopefully everybody's anticipated the move that this market was making. CPI numbers are out and they are as hot as we expected. Slight higher inflation than the forecast anticipated. And as you can see, the market did not like it. I actually was watching the futures chart while I was waiting for those numbers. And it was hilarious that instantaneously, as soon as the numbers report was printed, like the very moment the clock struck 8:30 Eastern, futures teleported down. And that's how I knew that the decision was made and things were not good. Didn't even really need to read the CPI report to know that things were bad. BBIG holding up decent. That's good to hear. BBIG is it's one of the it's one of the negative beta plays. Honestly, the market when down is not going to make it do any worse than it's been doing. Right now, BBIG is trading at 91 cents approximately. Still retesting some previous lows, but haven't broken support. Not even close. I'm not too worried about BBIG right now, though, because I got some SPXU calls burning a hole in my pocket. SPXU, if you didn't know, there are several contracts in my portfolio between the strikes of 2150 and 23 that are all in the money right now and sure to continue performing as the SPY keeps dumping while CPI fears and terror begin to reign. What happened to Biora? Well, Biora is getting punished by shorts again. There's nothing wrong with it. There's no news. There's nothing actually happening. So this is just shorts attacking the stock. You could say that the silence from their investment relations team, their IR desk, is responsible, but honestly, it's just selling off because it's selling off. There's no real explanation for it. It does reek to me of accumulation, though. If you're ever not sure, you can always throw up an OBV or a volume direction candles chart if you're on TradingView. This is volume direction candles by Duyuk, however you say that. And if you go out to the daily chart, you will find that the candles point to accumulation because you can see a huge clear plateau. This is effectively a more complex OBV indicator. That's on balance volume. And you see this flat line here. That's an indication that there is so little trading volume that it is dwarfed by all the volume that carried the stock up to $6 back in November and December. So all of those previous moves, I really wouldn't worry about what's going on here. This is what institutions do. They drive the price down to accumulate. Financially speaking, the company's fine. But on the daily chart, you can see that the momentum is starting to turn around. You've got a MACD cross right here, and we are at the bottom of the price cloud. So now we're just waiting for RSI divergence while the RSI prints a higher high, which it looks like it's getting close to. You have a slightly higher high. We just got to wait for a couple candle closes on the daily chart. When you get a higher close on the RSI and a lower low on the price action, that tells you that there is bullish divergence on the RSI. And whenever bullish divergence hits in Viora, like right here and right here, then there is upside. It's only happened a few times on the daily chart, and you can see that each time that it had bullish divergence on the daily, Viora took off. So that's all you got to wait for. Very simple signal. Let's go ahead and move back over to the broader market. I did not type that. So what do you guys want to see? This is your market today. Hell's Trading Floor has been absolutely killing it. I want to throw a shout out to Cool Ranch Kittens, who put in a bet for the long term. October calls on SQs, and said in the trading floor that they are up to $25,000 on that bet. Congratulations. Just throwing out a quick tweet to bring a few people in here. Man, this is a nasty gap down. All right, let's go check this out. So, this is perfectly on track with what I was estimating was going to hit for our new low based on the 2008 crash. I'm going to go pull up my comparison chart. Do not seem to have it for some reason. Let me do SPY and SPY. We'll put these both on a weekly. Okay. I'm going to delete that. Okay. We're just putting up some very simple moving averages. So that we see the exact same things. Okay. So if you compare, this is 2007, 2008, okay, the famous Great Financial Crisis. If you line up these charts pretty close together, let me see how close I can actually get them. Okay, here we go. So I'm offsetting them just a little bit because the 2008 global financial crisis, the crash started in October of 2007, whereas ours got started January of 2022. That's when we hit our peak. So things are a little bit askew. How come I can't make this fit? It's a little better, but it's not quite right. Oh well. All right, so I'm going to line these up like so. The reason why I'm doing that is I'm putting the peaks over top of each other so that we're starting at the same peak, peak to peak. And if we track the little drops, we have a higher high here. Oh. Let me just wipe all of this for right now. All right. We've got these two rising highs, and then from that moment forward, we have consistent lower highs that form a big megaphone pattern. And if you look at the 2008 Great Financial Crisis, we have the same thing. Trying to stick to some basic rules with the way that I'm drawing this chart. Okay. So we have 1, 2, 3 touches on the highs, and we have 1, 2, 3 touches on the highs in 2008. Now, where I'm estimating that we are currently at is right here, or rather, right here. We have very similar setups on our chart with 2008. And you'll notice that 2008, there was a summer rally that happened. We had a fall rally. Very similar moves. Both of them were pretty face-ripping rallies by comparison. The 2008 one was about a 15% rally. The one that we just had was 20%. Now we've fallen back down by 20%. So we gave back all those gains and more, and now we have set up a lower low, which you will notice also happened in 2008. Now the next step for our market is to go through a brief rally. Now, seasonally, what happened in 2008, their rally happened in August, and it ended in September. It was a very brief one. Started in early July and took them till mid-August before they hit the end of it, and they started to sell off pretty badly going into September, October. So where are we currently at? We're in mid-October, which was actually a seasonally bullish market for us. The differences between 2008 and our current year is that 2008 was a presidential election year with a Republican president. Now we have a midterm election year with a Democratic president, so it changes some of the seasonality for us. But the thing to keep in mind is that for the rest of October is a bear market for up until the very first week of November. So this is pretty much our cutoff, is this line right here. After this point, we enter into a seasonal holiday rally. Now with this CPI report coming in hot, the Fed is anticipated to put in a higher rate hike. Things are probably not going to end very well for the market at the end of this month. And then once we go into the holiday, we go into pre-holiday earnings. And those are going to be hitting all throughout the rest of this month. We've got earnings coming up for, let me see. Actually, better idea would be to get my earnings calendar up. But Q3 earnings are expected to be extremely poor. At least I'm expecting them to be extremely poor for most of the main retailers and tech giants. If you want to get some access to a good earnings calendar, I would highly recommend earningswhispers.com. Earningswhisper.com is particularly good. All right. So the rest of this week is going to be a little bit quiet for earnings. But the most anticipated ones are going to be starting next week. So we got the banks reporting. We got Bank of America, Charles Schwab, and Bank of New York Mellon are all reporting on Monday. Goldman Sachs is reporting the very next day. We've got Johnson & Johnson, State Street. Johnson & Johnson's a healthcare company. You probably recognize that, but Citizens Financial, I saw Ally Bank there a few minutes ago. Travelers companies, a bunch of insurance companies are reporting their earnings next week. All of these are going to be huge, huge, huge earnings coming up. And this Q3 earnings season is probably going to be pretty punishing for the market. So for the rest of this market, I'm anticipating that we are going to put in a lower low that's going to be about on par with what we saw in 2008. We might be coming up to it right now. So the SPY may be seeing its low soon, but if we've noticed anything comparing apples to apples, the market crash that we had in 2008, our peak to trough with this latest bear run, if we consider these to be the same or at least the same seasonal moves, 2008 saw a 15% decline. This one saw a 20% decline. So we can estimate that this new low that we're experiencing is still got a little bit further to go based on this low to low. So we are currently down 4%. And 4% is about what it fell in 2008. So I'm going to take a wild stab and say that this one's probably going to go a little bit further before we hit a bottom. My estimate is that for our low is going to be somewhere around 340 as a first level of take profit, and I'm going to have a second take profit down at 330. It's possible it can go even lower than that, but I'm trying to stay a little bit conservative. Let me go put my chart back up. Sorry about that, guys. So this is the range where I'm expecting us to hit our low. 340 is the conservative estimate. 330 is the more bearish estimate. And just for the sake of extremeness, there is also this support down here at 320, which is from the previous low in September of 2020. So this was the low of the market back during this time, but we had entered into an area of significant chop. So for us to cut through all of this the first time, I think is probably a little bit of a extreme expectation. So I don't think that we will hit this. It'll be a little bit too difficult for us to get all the way down to the bottom of this consolidation zone, but it's possible. So I am noting these take profit levels for everybody just so that we're all on the same page. All right, I'm going to looks like I'm not going to be able to undo all of the stuff that I just deleted, so I'll redraw that stuff later. I apologize if my voice sounds a little bit hoarse. By the way, guys, I've been a little bit sick. I had a COVID booster, and I think that maybe it's still hitting me a little bit. It may just be a cold. I don't know. Okay, let's catch up with chat. How you guys doing? Gerard, congratulations on those SQs calls. That's exactly what Cool Ranch Kittens had landed on for a huge gain. Hey Cavello, I think I answered your question already. Oh, for long term during the sell off, for this one, like I said, the 340, 330 level is about where that's about where I'm pretty confident that the market is going to stop at. 320 is like the absolute low for me, I think, at least for the current state of the market. But these are the three supports that I have here. I think that 340 is the one that we're going to hit for sure. That's at least what my take profit is at. And I'll leave like 20% of the position there. Just leave it alone and let it ride. Is this good for meme stocks? Well, not really. At least not directly. The thing is that with each of these stocks, they are going to be moved by the broader market. This is macroeconomics, okay? And right now, inflation is extremely hot right now. That causes effects on people's businesses that have wider implications that are apart from the market. So when you think of like how inflation is super hot, this has an effect on all those stores, right? Just like think of your grocery store. If cereal's becoming like $5-6 a box, that's like extortionate, but it's still a necessity for people. So consumer staples things that people need to have, or at least things that are very common that they get, which is the cheapest alternative to more expensive, like preferential stuff. Like, people are going to stop buying, I don't know, luxury cheeses and stuff, but people will probably start buying more cereal, bread, milk, eggs, the cheapest foods, and that's going to create a shift in the market. You have to treat meme stocks the same way, and it's going to affect each one based on their industry and what they are providing. If it's a service, if it's a good, that's going to affect them. AMC, for instance, I think can perform very well. And that's because as far as entertainment goes, entertainment is still something that we as humans gravitate towards. We still like cheap entertainment. We still go on dates, even though there's going to be an economic recession. Movies have traditionally performed really well. Movie theater chains do well during recessions. Like AMC performed very well during the 2008 2009 recovery. And that's because it's a cheap date. People like to go to a movie theater just to, get away from it. But you think of, like, I'm trying to think of a company that's still around. Like, the banks never recovered from 2008. The banks themselves, their stock prices plummeted and never recovered. Most of them are still trading far below their 2008 peaks. Yeah, I'm trying to think of one that actually makes sense for a comparison. Um, okay, like healthcare sector. Healthcare sector is insulated from inflation a little bit. Not completely, but a little bit. And that's because it's considered defensive. People still need healthcare, right? So for those meme stocks that are healthcare oriented, if you have a company that's providing even if it's a meme stock, if the company is providing a necessary health service that is mandatory or is at least critical to all the other healthcare giants, then that stock will probably continue to perform well because it is insulated from inflation. You might have another one like, I'll just throw out Bed Bath and Beyond. Bed Bath and Beyond is terrible for what the market is going through. And that's because Bed Bath and Beyond sells luxury home good products. So Bed Bath and Beyond is going to suffer sales, and that's going to hurt their stock. So where I would say companies like BBIG, which is doing advertising and social media, that's basically a free service, but the advertising doesn't go away because somebody's always selling something. So they're a little bit more insulated, and that's why the stock market, their stock is already pounded down to the ground, but and it's probably not going to get much lower. But assuming that BBIG was at $10 or $20 a stock, whatever, just arbitrary numbers, it's far less likely to decline as a result of the market downturn because BBIG is still providing a necessary service that's insulated from inflation. Like, just because prices of tomatoes goes up, it has no effect whatsoever on BBIG. They don't worry about logistics. They don't worry about any of that. They worry about what it costs for them to power all their servers and their data centers. They have to, keep all of their employees in the office. Anything that affects that bottom line, that's what will affect them. So this market is unpredictable for that reason. This is why bear markets are so dangerous, because there are things that connect and interact with each other that we rarely think of. So you have to think really carefully when you take a bet on something, especially if you're going long in anything, And that's what most traditional investors are trying to do in bear markets, is they're trying to find a safe haven so that they can put their money somewhere that won't lose. And inflation makes that harder because they don't have the option of just going to cash, because they'll lose a huge percentage of value in cash just because of inflation alone. That can create some pretty negative impacts. I'm going to switch SPY over to the 5-minute chart so that we're actually looking at something interesting here. SPY getting a little bit of a bounce, just because this gap was pretty aggressive, but I don't think this is going to last. We're still trading in a channel. I'll go ahead and put that channel back so that we can see this. Let's go to regular trading hours. There we go. So this is the channel that I had originally drawn that we entered in on the 4th of October. And now we have broken the lows from September. And now it's trying to retest those lows. So let me go ahead and put this resistance up here on the chart. We're so far away from it. We are just so far from this resistance. It's slowly coming back. But this is honestly, like, look at how little volume there is as these candles keep climbing. This is going to flush. Don't trust this. Look at how low the volume is now. I'm going to put my oscillators back on here. This is literally just an RSI cool-off. The flush was so dramatic, it has to cool off. We might fill the gap, but this market is seeing a huge... this market's going to see a huge drop very soon. Let me go check all the positions here. I'm surprised that the SPY is coming back at all, honestly, after that report. But I guess it needed to get at least a little bit of relief. I got to tell you, I was watching the futures market when this was about to print, as the CPI was about to come out. Not EverSource. This candle. A minute before the report came out, this candle printed, and then this was instantaneous. Like, I'm not even joking. Like, literally the second that the report was issued, this candle went straight down, all the way down to the bottom, and it didn't recover. Like, it bounced around below 35.50. It never got back above 35.50 after the CPI report was released. It was an instantaneous move. Just freaking teleported. Those algos that they have on Wall Street, just they instantly make the move. The decision comes out right away. It's so freaking quick. Hey, Rooster. If the executives sell their stock, I mean, the amount that they sold, as I recall, was not an extreme amount. So I'm like, it's fine with me. The executives are just selling a few shares. Like it was a negligible amount, like tens of thousands compared to their millions in holdings. Like it really doesn't bother me that much. They're still net holders of AMC, like by a massive margin. If they were really worried about the health of the company, then we would have seen a lot more dramatic selling, I would think. It would have been a lot more extreme. That's just my opinion. All right, let's go take a look at what SPY's doing. Okay, we just got a double top here on the 1 minute. Big evening star candle as well on the 1 minute. If I go to the 5, what does this look like? Looks like just indecision right now. Oh, there it is. There's the evening star. Okay, it's on the 3-minute chart. There we go. We're heading back down. So if you're looking for an intraday position on anything, here is the opportunity. I'm expecting the SPY to return back to the lows. I don't think we fill this gap. We're getting rejected by the 500 moving average on the 3-minute. This perfect evening star candle after this rejection off the 50. That's classic. I'm not hearing much from folks in the Discord chat. What's up, guys? The professionals are free to speak up. You guys have speaker privileges if you guys wanted to ask a question or bring something up. And if you guys over in the YouTube chat are not part of the Hell's Trading Floor Discord, consider joining. A lot of us already made our calls based on what we thought CPI was going to do. Yesterday was a pretty rough chop day. I was like pretty frustrated just watching things go sideways for a while as well, but it ended up playing out to our favor. Revlon just got halted. When did that happen? What the heck? They must have got their they must have had some fundamental news updates on their bankruptcy court case. It's a 30% move in 45 minutes. What is going on? Something happened. Let me catch up with AMC, actually. I've got some covered calls on this. I want to get out of those if I can get out for $1. Not quite. But things are looking good for AMC right now, and when I see moves like this, I know it's probably time to get out, so I'm going to go ahead and close those calls. Okay. I hate Fidelity's mobile apps so much, I gotta say. I've been using Fidelity's Active Trader Pro, and I can't get used to it. There's nothing about Fidelity's trading application that I enjoy. It's frustrating to use. Revlon lenders lose bid for review of appeal in city error case. Oh, so the bank error that ended in favor of Revlon. So the lenders wanted to punish their stock further. Or they wanted them to pay more money, even though the bank already proved that there was an error. Jeez, sorry, breaking my desk over here. Why didn't the VIX gap up today? The VIX already had most of the fear factor worked into it. This is actually worth going into. After I close my AMC covered calls, I will. I'll go and help you out with this. Just need a few seconds. I know I have some open orders here somewhere. Where is this? So it wasn't a huge profit for me, but I'll take 25. I'll take a few dollars. Not a huge deal. It's all about making that rolling income. If I'm gonna hold on to AMC shares, I'm gonna make them work for me. So I took a profit on my AMC covered calls. Honestly, like Fidelity is terrible for selling covered calls, especially at these prices. I'm giving up 5% of my profits just to commission. It's kind of stupid. But what can you do? Okay. AMC is touching 580. Hey, Chronicle. Do I think that the SPY crash will be followed by crypto and big ones like Bitcoin and Ethereum? I don't think that the crypto crash is over, if that's what you're asking. I do think that crypto has farther to fall. Bitcoin is in particular at a pretty dangerous precipice right now. And it is tracking the SPY. I don't know why people continue to think that Bitcoin and crypto is a hedge against the market. It's never been a hedge against the market. It has always led the market in crashes. And the most extreme parts of the crashes have always resulted in massive losses for crypto. It's never been an inflation hedge. It's never been a market hedge. It just doesn't. It's not a safe haven. It's the most speculative asset that you can possibly put your money into. And right now, we are currently trading at the last leg of support for Bitcoin, going all the way back to 2020. Like this is it. This is the last leg of support. If it crushes through 18,000, then Bitcoin is coming all the way back down to here. Like it's going all the way back down to $13,000, and probably lower than that. We haven't seen Bitcoin at these levels since 2020, and after the crypto market basically woke back up as a result of the COVID, the COVID stimulus. That is what all of this was. This was fueled by COVID stimulus and a whole bunch of people with a lot of nothing to do. And like I would have thrown my money in crypto if I did throw my money in crypto actually, and I did make a lot of money in crypto as this thing was ripping, but I didn't do it with Bitcoin. I did it with other assets like Cardano and Siacoin and a few others. Ethereum was one of them. But yeah, I do think that Bitcoin is probably going to go even further down. Um, there was the appearance of a diamond bottom that's been broken now by this new low. So I think that Bitcoin is very close to hitting its breaking point, and we'll see it back down at 1,400 within a couple of months. Yeah, Otherberry, I agree. The whole narrative that crypto is an inflation hedge is just a narrative just to create bag holders. It doesn't make any sense. There's nothing about crypto that is a protective asset. Is it useful? Absolutely. Does it have its place? Definitely. Would I invest in it right now? Hell no. Hell no. It's not the time. Bitcoin is going through its usual cycle of down. It has ups and it has downs, and the downs are extreme and they take a long time. The big crash is very spectacular. Bitcoin gives up like 50% of its value every time there is a crash, and it takes months, not years. Trying to think, like let's go all the way back to yes, Mount Gox. Mount Gox was great. This was Mount Gox. This was the first crash. I got to witness this firsthand. I was heavily playing with Bitcoin at this time. And then Mount Gox got hacked right at the top of this chart, and they lost millions in Bitcoin. Millions. And it flash crashed in 2 days. Bitcoin lost, God, it was, it lost 80% in 2 days. That's worse. That's worse than the 1987 flash crash of Black Monday. That's worse than that's worse than the entire distance of the crash of 1929. From October of 1929 till December of 1930, this 2-day crash in Bitcoin was worse than that. So tell everybody that ever says that Bitcoin is a market hedge to go fuck themselves and go sell their bullshit somewhere else. They are a liar. Never listen to anyone telling you that. They're a fucking idiot. There's nothing about Bitcoin that is a market hedge or a safe haven or anything like that. That's nonsense. That's extremely stupid. Bitcoin is an excellent speculative asset when it's in your favor. Invest in it when it's low. Like when it drops to the bottom of this market, then I'll invest in Bitcoin. Like when I see it back at 4 digits or less. Is BBIG in a quiet period? Well, they're building up they're getting ready for their merger, John. It'll take some time. We just have to give them time for this. Um, I do believe that they are working on the merger. All the signs point to it. They're not being quiet. I understand that they took some time off after the court case. Understandably so. It was pretty freaking exhausting. Um, but the Zash and the Vinco teams are hard at work now. Ross Miller is getting up to speed as the new CEO of Vinco, and you got Eric Finman, Ted Farnsworth, Lisa King, and all the other heads over at Zash are getting ready to pull in all of their legal team for the merger. They got to go through the whole M&A process. It's a big legal to do. It's going to take a few months. It's just the nature of the beast. It takes some time. Okay. Albertsons shares rally on a report of Kroger merger talks. Interesting. So Albertsons, that's Safeway stores, isn't it? That's Safeway and Aldi's. Hmm. Have I seen the video by Aaron Brick? Nope. I don't know who he is. I've been saying that this is going to be worse than 1929 for months. It's nice to have someone agree with me. I wish that both he and I were wrong, whoever he is. I don't want a Great Depression. I don't want a second depression. Why don't I short Bitcoin? Because as soon as I short Bitcoin, there will be some rally. Like, it moves so quickly. I don't have time to watch Bitcoin. I have enough on my plate right now just watching the market and the way that the crypto market is going. Like, things are just way too volatile. It's not a safe place to be. I don't want to be in it. That's why. The risk is outside of my tolerance. So for other people that are just only doing crypto and that's what they trade, then that's fine. Like, you short it, you can do whatever you want. For me, I'm just staying out of the crypto market. I'm holding on to the assets that I want to hold on to. They're actually performing pretty well. Those being Cardano and Siacoin. Those are the two that I currently have. Siacoin's got hurt pretty badly, but like I bought all of it for like less than a cent, so like I don't really care. I'm just kind of hoarding it. But Cardano is one that I'm invested in, and I took out the money that I wanted to take out. I liquidated what I wanted, and I've moved that over to other assets. As far as like the crypto market's concerned, I'll go back in once I've made my money on the bear market. What's more, the exchange that I use doesn't support shorting actually, so that's another reason. I'm not on Kraken or any of the other ones. I just not currently shorting it because I don't want to and my broker doesn't support it. They're just a crypto exchange. That's all they are. I use Bittrex for those curious. And the only reason that I use them is because they let me trade literally every single crypto. So if I ever wanted to buy like some obscure coin, I know I can get it. The one exception was Shiba Inu coin because it wasn't vetted. It was like widely believed to be a scam. So they're like, no, we're not going to do that one. E-Trade is easier. I've heard bad things about Schwab and E-Trade. And I really don't care for I really don't care for the elitist attitude that they put out in their Super Bowl commercial. So that turned me off of them pretty quickly. Can I check BRQS? I can take a look at it. No. No, it's not coming back to life. I'm sorry. The only thing that you have is you have bullish divergence on the RSI. These two moves right here, that's bullish divergence. So you got a lower low on the price action, higher low on the RSI. That's bullish divergence. That's the only thing that you have working for you, but this thing is in a definitive downtrend. Like, look at how far apart the moving averages are on the daily chart. I'm looking on the hourly as well, and it made a single move. It's up 15%. It's a great day trade, but not a predictable one. There was nothing predictable about this move. And now it's getting rejected by its 50 period and 100 period hourly moving average. So BRQS is getting hammered back down. If you're long on it, I would take profit while you can. That's just my That's how I would trade it if you got in this morning or like last week or something. But I'm not trading BRQS. That one's dangerous. It's getting smashed. Do I still that AMC will have a run in November? Seasonally, it makes sense for them to. Financially speaking, it's going to depend on their earnings. I think they have a good chance for a good earnings report. There was a lot of really good hit movies that came out this past quarter. They didn't break any box office records like they did with No Way Home from Spider-Man, the Spider-Man movie. But I know that like we've had some pretty banger films coming out back to back to back. We've had way more releases, and based on their last earnings numbers, there was an awesome performance um, at the concessions. Based on the number of moviegoers, people spent a lot more money at the theater while they were there. So that was also very encouraging. Schwab doesn't even acknowledge MMTLP as a legit symbol. What is MMTLP? Oh, this is Metamaterials preferred stock. Okay. Not all brokers support preferred stock. I don't know that that would be the only reason why I would say they're a dinosaur, but there's plenty of reasons not to like it. Okay, let's catch up with the SPY. We've been away too long. All right. That evening star on the 3 minute that happened a little while back was freaking beautiful, man. We had two. We had one here and another one here. This one was the best confirmation. You have a perfect green candle up, evening star, and then a big red candle engulfing down. This is the perfect evening star move. This one was early. The red candle didn't engulf. It stopped right here. But this one did. Very clear engulfing red candle after an evening star pattern. That's perfect. So my entry was a little bit early. I entered right here on this candle. Actually, let me go ahead and draw my entry here. I set myself up for a 355 stop loss. Right there. And 340 is the take. So this is a big trade with a really tight stop loss. If you want to give yourself a little bit more safety, then go further up to like 360 or so. But this is where my trade happened. At this point, the trade is already. Oh no, you can re-enter right now. Actually, well, let me go ahead and re-enter this so that it's actually like being tracked on my paper trading account. We're gonna do a $500 risk. Actually, no. Let's live a little bit. We'll do 800. It's just paper anyway, right? I think I missed the entry. We'll see. We've got a couple of minutes left in this candle. Maybe it'll bounce back up. No, it's not going to. It's going to cut through the 50. Damn it. Shouldn't chase trades like that, but I want to track this one so that people can watch the price on screen. My actual entry is like back up here. This is exactly where I called it out at. Right here on this evening star after this close, the entry happened right away. So the actual entry price was closer to like, yeah, it was like $353. Hey Snake, will we hit our take profit tomorrow? It's possible. I'm inclined to say no though. It'll probably take until next week for the momentum to really get moving. CPI report was an excellent indicator, but this is going to be a swing into next week. I think that the bank earnings is really what's going to carry this thing to the downside. If you have some trades intraday for tomorrow, I would anticipate there being some more selling going into the evening today. We'll see the market kind of flush out a little bit. That'll be an excellent opportunity to take a tidy profit near market close. Yeah, no worries, my dude. Scrap Queen, thank you as always for keeping us up to date on all the news. What is this? Is this Fintel? I just want to know where you're getting all this news from. Like, these are excellent articles. Jon Stewart, Gary Gensler spar over SEC oversight. Quote, "It's not a level playing field," unquote, Gensler says. Stewart interviewed Gensler on his podcast, The Problem with Jon Stewart. No, let me put this on screen for everybody, then everyone can see it. Gensler admitted when discussing the stock market, it's not a level playing field. Gensler listed examples including increased transparency about short selling, securities borrowing, and insiders at large companies selling stock as ways to close that gap. Rules about those activities have been proposed by the SEC, Gensler said. The SEC can make proposals about new rules it wishes to implement, but Congress is ultimately burdened with writing laws, not the SEC. Gensler explained when Stewart asked if the SEC was doing enough to create equal opportunity for all investors. See also Ray Dalio says we'll see less money invested in equities in the future. Earlier in October, the SEC fined celebrity Kim Kardashian for touting a cryptocurrency in an Instagram post without disclosing the payment she received. Quote, "Yes, we are holding people like Miss Kardashian." I assume that finishes with accountable. I find that pretty laughable. But yeah. There was actually an incident where somebody tried to talk me into doing something like that, like feeding information to a celebrity. I'm not going to say who it was, but somebody who claimed to represent a very minor celebrity was trying to reach out to me at some point many months ago last year on like stocks and stuff that were going to that were like the most squeezable, and have me tell them so that they could make an investment and then pump it. And like, I'm so surprised more celebrities don't just get arrested constantly, because I know that there are some out there doing stuff like this. Okay. All right. I've adjusted my stop loss a little bit because I want to place it at the original location that I had set, which was at 35.5. 355 was that stop loss. So got that. It did end up rebounding a little bit, so I probably would have got my fill, which is annoying. I saw it breaking the 50 and was like, shit, it's going to move. And it's like, nope, just kidding. We'll just add a little bit more. Make it worth our while. Okay. And now we'll give that some time to play out. The market's going to need a few days to carry it down there for us, but 340 is pretty much where I am seeing this thing heading down to. I really like that evening star pattern. That's very clear critical resistance. And by the time we get to the afternoon, we'll be at the upper top. We'll be at the edge of this channel. So even if the price does bounce back up to this level, it'll get rejected. MACD indicator is coming back towards the middle, and it's starting to get a little bit closer to the slow lines. So we're seeing the lines starting to thin out a little bit. They're getting much closer together. That's very good. I'm beginning to think that this is about to print a head and shoulders pattern here in a little while, actually. So we'll move that down to the 3-minute. Let's go check out HYG. Get all my indicators back on screen. Okay, HYG. HYG is getting ready to cross down its actual... Oh, wait, I'm still on the daily chart. Hold on. Okay, HYG. RSI is coming up to retest its moving average. MACD and PPO are moving back up. Finally starting to get some of that consolidation. We have another confirmation from HYG. This is a tweezer top. We have a tweezer top and an evening star here. I would have traded this on the SPY. This would have told me to take a short position if I was looking at it. Things are definitely looking very bleak for the SPY. I'll catch up with chat. Can I check ATER? I'll take a look at it, sure. Just letting you guys know, though, I'm not putting my money in meme stocks right now. The market's not the right time for it. I'm happy to look at any ticker that you want. Well, let's see. You have a lot of bullish divergence on the 1 hour, but you had it here too on this move, and then gap down. What happened in the news? So far, nothing that I'm seeing. Scrap Queen, do we have any news on ATER? If you wouldn't mind going out on a quick search for me. If there's anything critical that happened, I'd like to know, just so I'm factoring in any of the other major news. Man, ATER is just getting punished. It's been consolidating for a while. Now it's getting ready to start trading below $1. The floor is The floor is above you now, man. There was critical support here at $2 and it fell below it. Now it's trading at $1. I mean, at this point, it's not really worth selling. You have a MACD cross coming up here on the price cloud indicator, but I'm not sure how much it's going to get you. Probably you'll be lucky to see it back at 150 in the near term. It's just lower low after lower low after lower low. Oh man, there was a diamond bottom forming on this too. It broke down. Doesn't matter if I draw it. It's gone. Savvy Trading, thanks for the info. NATO Secretary General Stoltenberg says that allies have decided to increase their stockpiles of weapons. Circumstances in which NATO might have to resort to nuclear weapons are quite remote. Every time I hear the word nuclear weapons coming in the news attached to NATO makes me a little bit, just tightens my butthole a little bit. Makes me pretty freaking nervous, man. Hey, Brian. Brian says, hey, TD, let's say I'm bearish on the SPY. How do you decide to buy puts on SPY or play a short ETF and buy calls or shares? I guess, how do you weigh those options? Depends on several things: risk tolerance, risk management strategy, the capital you're working with, and the strength of the move. If you are, for instance, a swing trader like moi, then I'm looking for capturing large moves on anything that I'm trading. So all of my trades are going to essentially come down to how large is the move going to be? Is it going to scale on a leveraged ETF, or isn't it? And how much money am I willing to bet on the play? If I'm working with very small capital and I'm looking for only the largest moves, then each of my bets are always going to come down to I need to save my capital and I need to use it wisely on only the best opportunities. So for that reason, I look for, whenever I see the SPY doing something like this, which appears to be a double top pattern, and I see the strength of its move that came before it, we're in declining volume. It's gone all the way up to here. So I'm looking for a measured move. We have a double top formation starting. And if this next candle prints red and engulfs this green candle, then that's a good entry for me. So I'm going to pull up my trading panel. I've got another trade in this, but like I said, this is a paper account. I don't care about this account. This is just for teaching. So what I'm looking for is I'm looking for the SPY to trade to the downside on this. Now, if I were to just trade the cost of the shares, then this would probably cost me quite a pretty penny, especially if I'm trading with margin. So for me to do one share of this is going to cost me $353 plus change right now. So if I'm working with really small capital, that doesn't really compute. So I need to go somewhere else, and I need to go with something like SPXU, which, as it happens, is printing a double bottom pattern, just the opposite of what the SPY is doing, because these move in opposites. So I'm going to look to go in the other direction on this. So I'm going to go ahead and set myself up a long play, and I'm going to set my support at the 100 period moving average here on the 3-minute chart, since I'm going to pretend this is like a day trade. and I want to give myself the best opportunity to be right. So I'm going to wait for this one to play out at least a little bit. I want to see this candle print green. But the idea here is that I'm setting up my risk rewards so that I have the best opportunity and I can play this play without risking too much margin. So because this is a leveraged ETF, I can risk like $22 plus change per share, and I still capture the move that I'm trading on the SPY. So that's part of how I decide this. If you're trading options, it's almost always better to go with SPXU or UPRO, just because you're able to trade them so much cheaper. It's much more affordable, so you can add more contracts and lever the trade a little bit more. And as long as it is a swing trade, then you are giving yourself plenty of time, like 2 weeks, for the trade to play out. Then the leveraged ETFs are almost always better because you're risking less capital to capture the same move for a 3 times leverage. And provided that you're right, you're going to be up big. Now, if you're going to day trade, this changes things. Day traders have to use 0 days till expiration contracts. You can still use these for just trading plain shares, but if you're trying to do contracts and you're doing 0 days till expiration, you have to trade the SPY, and that's going to make things more expensive for you, but you still have the advantage of playing really close to the chest. So provided that you are playing with an ample supply of margin, like you have an account that's larger than $10,000, then you can take a risk by buying 1 or 2 calls or 1 or 2 puts on SPY for 0 days till expiration and go just like $2 or $3 out of the money. You're going to risk somewhere between $200 and $500, which is going to be somewhere between 2 and 5% of your portfolio. So that's a pretty significant risk. So you have to keep all this stuff in mind. It all comes down to risk management. Okay, we got our rejection candle, and we have this thing starting to print red in our favor. So I'm going to take both of these trades. I'm going to go short on the SPY. I'm going to risk the same amount. I'm going to risk $200 on this one. So this is adding to what I already have. Did it close the other trade? Did it close the other trade on me? No, it didn't. Okay, it just had to refresh it. Oh, it's a separate trade. Okay, it's treating the trade separately. Okay, thank you. That was really super irritating to me. Okay, now it's merged the trades. All right, whatever. I was like, what in the hell is this thing doing? All right. So I'm going to adjust this to the top of my green candle, and I'm going to try to get my entry right here. This is going to be a 1.8 risk to reward ratio trade, and I'm going to do the same trade. I'm going to risk, what did I say it was, 250? I can't remember what I did, what the last one was. Close long position in the SPY. What? I have no idea what just happened. I may have misclicked something on this. It added the right amount. I'm just going to go with this. Okay. So I'm taking this trade now. This is a $250 risk because that's where my stop loss is set. And I am setting this trade so that I take my profit right here at 23.83. That's just slightly below these 2 candles because this is where I saw, this is where I see the market heading to over the long term. And I'm estimating that this is probably going to take like just till the end of the day. Like this is 1 day trade. I can't do it with the SPY because it just merges the trades, so it's kind of like just acting really weird. But I'll mark this one separately. Okay. Okay. So trading this on the SPY, I get a slightly better risk reward ratio. I actually get a significantly better risk reward ratio. It's 3.7. So if I'm day trading on the SPY, I have to risk more cash in order to trade it, but I'm getting a better risk reward ratio. So I get a better payout if I'm right. So I can risk that same $250, but it's still going to eat a bunch of my margin because in order for me to take that trade, $250 is going to require me to trade 172 units. That's 172 shares of SPY. So I have to actually have the margin in my account to do that. If I wanted to trade for a $250 risk with that tight of a stop loss, that requires way more capital. D-Op Trader asks, hey bro, what moving averages are you using? I am using SMA by KGS. That's the indicator. My moving averages are set like so. I have 10, 20, 50, 100, and 200. And they correspond with the colors from shortest to longest: white, blue, green, orange, red. 10, 20, 50, 100, 200. And that is the same period moving average on all time frames. Is this a bear flag or a bull flag? Oh my god. I'm gonna get stopped out. What the fuck? I always have the worst luck on my trades when I'm streaming. I do fine when I'm just doing this for fun on my own, but every time I'm streaming, it's always a losing trade. This market really likes to make me look bad. Ain't that just the way it goes? Ain't that for all of us? Gap fill to 356. I mean, you might be right. I'm shocked, but I guess the market did kind of do a teleportation move after hours or pre-market. Like this is just a relief bounce. It's not going to stay up here. The move is already taking place. Snake, if you are holding your shorts into Friday, if those are expiring Friday, I probably wouldn't hold them past today. Unless you're doing day trades, like you shouldn't really hold them this close to expiration. Theta's eating you right now. It looks like liquidity hunts. It could be liquidity hunts actually. Let's put the liquidity indicator on here. There were liquidity levels up here. Yeah. We did cut through big liquidity levels here. Because these are major resistances where we had touched, that we had touched before. This got hilariously close to my stop. It looks like it's going to go back down in the other direction now, though. Yeah, you're probably right. This might be just a liquidity hunt. That move was extreme. Oh, look at this meteor candle printing on the 5-minute. Yep. Big inverted hammer candle, aka a meteor. I think a meteor candle sounds cooler. What do you guys think? With a bad CPI, how is the Nasdaq not down 5% today? That's well, it's up to each person's opinion. But the way that I see it is that the Nasdaq is not trading on fundamentals; it's trading on it's trading entirely on speculation right now. The market was already pretty fearful going into CPI, which is unlike most of the CPIs that we had. Um, all of the CPI prints that we had like these huge rallies. Like CPI printed on here August 18th, and it was a green day, August 18th. CPI printed, it was bad. We were having this awesome rally, and then it gave up the next couple of days, and it started gapping down like freaking crazy the following week. So from that point forward, everything was just bad, 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 bad all week long for the rest of the market. So this one's a little bit different because we've been heading down into this CPI print. We just got it today, and we gapped down hard. So that's the difference in behavior. There was another CPI print that hit on, let's see, Thursday, June 9th. We had been on a rally. Then CPI came out on Thursday, the 9th, June 2022. Market gap down 3 days in a row. And we gave up 10% in just 3 days. So, like, it's not, today is not the big move. It's what happens next week that's going to be the exciting part. Every single time that CPI comes out, there is a delayed effect on it. Yeah, Thursday, April the 7th. We did have a gap down 2 days before, but the real sell-off came after that. So all the inflation data that comes out like beginning of each month, if the market is rallying like crazy going into it, it gets way worse. But even March 8th, we still traded a bit further down after being in a downward market. February 7th, we had a bad CPI print. And then the Fed talked about tightening, and that's when things started to get kind of rough. So, it's not about what happens in the here and now. It's about what happens next week. And I think the next week is going to be pretty freaking brutal. But I do think that this is probably the last leg down for the year. So this is going to be the last. This is going to be the last like big hit for the market for the rest of this year. That's kind of what I'm thinking. The market has been getting like really badly brutalized for a long time, and now we're going into a seasonal bullish period. But we've got to get through this last big sell-off. There's one big flush that has to happen that we've been holding off on for a while. I thought that we were going to keep flushing down even further after July, but it never came. We went on a big rally instead. Just checking on the position really quickly. And what I think is more likely to happen is for us to keep this momentum going to the downside. We'll start cutting down to these different levels. And then by the time we get to the end of October, things will start to turn around. We'll get a little bit more jumpy and then start taking off going into November. That's kind of this is more like what I think that the market is going to do for the rest of this year. November might be a little bit more like sideways, but December I'm pretty bullish for. Like this whole season is very kind to the market. If you do not laugh, you would cry at the nonsense. What time is CPI? CPI already came out. The report printed at 8:30 Eastern. The data is in. I'm talking about something else, Brendan. Brendan and Ella's Fun Adventures. Yours sounds like a channel where a couple knows how to have a good time. Hey Snake. Okay, if your shorts are going out till the end of October, like I'm content to hold. That's where I'm at. I'm pretty happy just like waiting out this volatility. I'm going to be very upset if this stops me out. Because this is stupid. These volatility swings are fucking stupid. I'm annoyed. Fine. You want to fill the gap? Fine. Go fill your damn gap. This market does some truly dumb shit sometimes. All right, I'm going to wait for the gap to hit. It was too tight of a stop loss anyway. That's what I get. So I'm going to go ahead and I'm going to set my stop all the way up here. I'm going to wait for us to hit the top of this channel. And I'm very pissed off. So I'm doing a very large revenge trade against the SPY with my paper account. Okay. I'm annoyed with the market, so I'm doing a revenge trade with my paper account. We don't revenge trade with real money. Thoughts on Accelo and the merger with CFFE? It's a good thing for Accelo, but I've given my thoughts, and I think that as long as Parchata is still employed at that company, then it's not something that I'm interested in playing. I think that Parchata is a dick. So I'm just going to, I'm just not going to trade Accelo. I have a position because I can't get out of it. So whatever happens, happens. Hey, look at that. We got our entry. Whoop, there it is. It's a much more patient play. This is more of the swing that I should have been playing. I didn't even look at what the profit would be. This is a dumb bet, by the way. This is really stupid. I think that's like 10%, or that's like 8% of the portfolio. But I will multiply the it would be a 50% add to the portfolio if it actually hits. That is funny though. Sometimes the market is just really stupid, and it needs time to just get its stupidity out of the way. And after enough time has passed, after it realizes that it's been stupid, then it'll start moving in the correct direction. But you have to give it time. And it's not about getting mad. It's not about getting mad. It's just about reading the technicals and understanding what the macro events are going to lead the market to do. This volatility that we're seeing now is the definition of a dead cat bounce. This market is just it's volatility turning it around. This will not last. And I am trading on technicals. The CPI print was bad. We know it's bad. This should not surprise anybody. This gap up is the only surprise. The gap up is the only surprise. Exxon Mobil? What's Exxon Mobil doing? Holy smokes. Wow. Well, Exxon did very well overnight. Can I look at XPEV and NEO? Sure, Jay, I can look at that. Okay. XPeng Inc. Interesting. So XPeng Inc. Um. Hmm. Homie, you're in a bad channel. This one looks like it's just sell, 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 nonstop. There's not a lot of history for it. All right, so this is the beginning of the chart, August of 2020. What does this company do? Xpeng Taxi. Designs, develops, manufactures, and markets smart electric vehicles, produces environmentally friendly vehicles, namely SUVs, the G3, and a four-door sports sedan, the P7. The company was founded by Xiaopeng He, Heng Jia, and Tao He in 2015 and headquartered in Guangzhou, China. Okay. I could see it being a good play like later on when the market's not tanking completely. Vehicle sales are highly dependent on the car market, which is very bad, especially for electric and smart vehicles. So this is not the right market for them. So it's not a surprise that their earnings are bad. It's not a surprise that their sales are down. And it's not a surprise that their stock is selling off. Provided that the company is in good financial situation, that it will be able to sustain its business for the next 3 years while the world burns, this one could be good. For right now, this is one that I would stay out of and just keep alerts on it and keep watching the price and keep an eye out for when market conditions and the global economy begin to improve. Then I would look into this one as an investment. For this one, this seems like most of the selling has occurred. Sorry, excuse me, had to yawn. Most of the selling has occurred, and most of the price decline has already happened, so there's no point really in shorting it. Although I will say that the volume going up as it's heading further down is pretty bearish. Like, that's continued selling. Let's go catch up on the SPY again. Is it opposite day? Is it opposite day? What is going on? The SPY is green on the day. What is happening? And it's breaking its channel, and it's going to hit my stop loss again. What is happening? Like, I know that we did that for a joke and all, but like, what is going on? I don't understand what's happening. So I guess you're going to tell me that the SPY has priced in that CPI was going to be bad, and now that means that everything is fine, and we're just going to go in the completely opposite direction. What is going on? Burning put premium? I guess so. This isn't a market bottom, though. Well, that's why we only play jokes with a paper account. I'll have to go spend some time building that back up to where I had it. I'm seeing people talking about AMC. Ooh, I'm glad I closed those covered calls. Looks like AMC is coming back. Mm-hmm. Let's figure this out. Let's figure out the technicals, figure out what's going on. We missed something. Switch to 1 week and look at the 200 MA. Okay. Ah, I see. 200 weekly moving average is where this thing has hit. It bounces off it until it doesn't. We've only had one touch of it before COVID. This was 2016, 2011. But you can go all the way back to 2008, and it crossed below. The 200 weekly moving average is an excellent floor. So it makes sense for it to bounce off of it in the short term, but in the long term, this is like a last barrier. But we'll see. If we end up being on the wrong side of this trade, then we just switch long and we just go play it to the upside. That's all we do. We react accordingly. We don't get upset. We don't get mad. We go find a new trade. FedEx. I was hearing you saying something about that, Persephone. That there was a gap on FedEx. Ooh. Ooh. There is a gap on FedEx. Ooh, my. 20%. Hello. Well, I do like that. Okay. Well, let's see. I like this FedEx play. I'm kind of reviewing prices. Sorry for the quiet, guys. Oh, Jay, sorry. I will get back to Neo. Sorry about that. All right, I got Neo and UPST on my list to check out. I was looking at FedEx because it caught my attention. Persephone mentioned this gap several weeks ago. That is a pretty big one, and it is retesting the ceiling. If this market is going to turn around, then that would be pretty huge. I could get behind that. I could get behind that play. We'll see how that does. We'll play for the gap. Set a stop loss for here. And we'll take a swing on this one. Okay. We got to go make up for that stupid joke that I was trying to play on the market, and it made a joke out of me instead. All right. So SPY just got smacked by its 200 period moving average. I'm waiting to see if there's other signs that this is a full turnaround yet before committing. Like, this big flush is... This big flush was juking a lot of people out, me included. But I don't know that it's... I don't know that this is an actual turnaround, because the volume was still going down the whole time. Rev is ripping because they're trying to put lipstick on this pig of a market. Oh, man. Like, don't get me wrong. I'm not going to be upset if the market turns around, because we can start making money on the way going back up. But the fashion in which this bounce occurs, if this truly is the bounce, would be so annoying, just so obnoxious. And I guess that should be the sign. Like, if CPI is really bad and the market flushes ahead of CPI, then we should have guessed that the market was going to turn around on us the moment that it got its flush down. As they say, it's a very efficient market. It's very efficient at taking your money away. Oh, wow. What a joke. Well, we called the flush from the CPI print, and we did put in a new lower low. The channel is now broken. Now I need to go and recreate this new channel to go and see what SPY might do. Let's see. I'm trying to look for anything that I missed. Okay, so we had some bullish divergence. And then we gapped down. So that didn't play out. Dixie is dropping. Yes, it is. Very fast. 1% in 2 hours for the Dixie? What? Holy cow. Oh my god, the bonds are going nuts. The 2 years at 4.45. And the 10-year shot up to 3.9. What's the inversion curve done so far? It hasn't updated. I'm just creating my own yield curve just so that I can get real-time updates because I want to see what the I want to see what direction they're moving. Make it easier on myself. Okay, so we're going into deeper inversion. Oh my god. This crash is going to just wipe out millions of bank accounts. Fidelity is position close only on MMTLP. Well, it seems like Wall Street has decided to make up its own rules in all cases now. Sorry to hear that. Yeah, this move in the SPY has me really suspicious. Like this is really suspicious. I don't know that I trust this move. I'm still really hesitant here. When was our last CPI print? I'll go take a look at some of those tickers, catch up with you guys. Sorry about the long wait. I'll take a look at Neo really quickly. Still in a downtrend, but moving averages are starting to move closer together. You're starting to get bullish divergence on short time frames. What's the daily look like? Okay. Things are looking a little bit better for Neo. You have a double bounce. You have a double bottom here. Okay. One touch, two touch. You're going to have to retest the 200 moving average, which is moving closer to you here. So wherever this 200 moving average is, if you do not break, then it's going to head back down. You can day trade this up to the 200, but expect it to get rejected again. It's not a good market for Neo and car manufacturers. And then there was one other ticker, UPST. That's Upstart. Upstart I was very unsure of because of this being a pretty bad market for lenders. Looks like that diamond bottom pattern is starting to play out, though. That consolidation on the MACD is looking very nice. I was expecting a breakout back here. That didn't happen. It's a descending wedge. Okay. So UPST is looking like it's about to break the wedge, and it coincides with a 50-period moving average right here. MACD crossover has already occurred, and the RSI is very strong above the 50. This is all looking really good for a long trade on UPST. Yeah, if the market starts performing really well, then this could be a good place to look. Looks like they're moving into looks like they are moving into personal lending. Okay. Oh, SPY is still printing, so UPRO is up 6.8%. I don't get it. I don't get it, but I don't have to get it. It's not as though this market ever truly made any sense to me anyway. Okay. Well, if the market does not go further down, then it's a good idea to get some long distance hedges. We did know that a rally was coming at some point, so at this time, my best suggestion, and this is absolutely not financial advice, but the best thing that one can do at this juncture is to look for long dated distant calls on the SPY or calls on a leveraged ETF such as UPRO and stay close to the money. And when I say long distance, I'm talking about December, January. It's expensive, but it is much better to give yourself some time and some distance on the plays because you have a lot of you have a you are not certain that the market is turning yet. Right now, we have no idea if it is turning. There's no certainty here. The trade is still developing. We have been looking for the market to hammer out a bottom for a while. We thought that it wasn't quite in yet. I'm still not convinced. I'm still not convinced that the market bottom is in. But the CPI report did get a big flush early in the morning, and now we've seen things ripping back to the upside. So maybe it is. We have to see. At this point, it's probably wise to hedge yourself in both directions. Keep yourself in something that is going to protect you from downside risk for the rest of this month, because the end of October, the last half of October, does tend to be a really bearish part of the month. So if we do see a big flush down again, that would take us to a new lower low, then that low could take us all the way back down to 350 on the SPY again. So be ready for that possibility. It is a distinct possibility. I'm actually looking at this FedEx play for a long position because I saw this gap down, and I do know that that the FedEx company was mainly seeing downside because of lack of shipping, and that's likely to change for the Christmas season. So going long for the duration of this next quarter does make sense to me. So I'll keep myself exposed to FedEx, and I'll go ahead and post that trade in the Discord. Okay. If you're overall short on the market, this is a good time to consider at least getting yourself that long position, because we are still near a market bottom. We're very close to one. You can't time these perfectly. Time in the market beats time in the market. Don't over leverage yourself. Don't get too much exposure. Just hedge yourself. UPRO is a good hedge. Just case in point, we had hit the bottom from June. A hedge here would have given you 60% gains. And that's just flat gains on 2 months of trading. Just 2 months. Give yourself 2 months long exposure to the market, 63% gain. And that way, if your shorts don't work out, doesn't matter. You're no sweat. Take the stress out of trading. It doesn't have to be stressful. And this is why I don't really day trade, because day trades, a news event, market volatility, anything, or just one big whale with a grudge can ruin your day as a day trader. Day trading's too stressful. I don't like it. I like swing trading. That way, if I'm wrong, I'll know ahead of time. I have time to adjust my trade. I can hedge myself in both directions. And if I am wrong, no big deal. I have ways to protect myself. With day trading, the only protection that you have is that when the loss is happening right in front of your eyes, is you let your computer take the loss away and lock it in before it becomes an even bigger loss. But the computer won't always stop you. It can't protect you from yourself. So at this point, I'm pretty much both long and short in the market. Like, I've still got those short positions, but I'm looking at long positions now and putting myself out until December and just staying close to the money on some UPRO calls. That's what I'm thinking. Oh, Stuart, I hope you're joking. I hope you're joking. I would hope that things are not that bad. We're trying to make sure that people are making money no matter what direction the market is going. I think it is time to give everyone a quick heads up. Let me go ahead and post this trade in the Discord. I want to make sure that everyone is ready for market reversal. Okay. If you guys have some friends in the Discord, please give them a courtesy pat on the shoulder and let them know that the Devil's Trades has been updated so that they can see what the change of strategy is currently. Right now, we are still net short in the market for the short term for the duration of October. Still deciding whether or not we are going to hammer out a bottom, but we are going to start scaling into long positions and start looking for opportunities to go long on the market. So the market momentum has started to shift. We are starting to see more bulls stepping in, and that is becoming more obvious to us. There is likely to be some opportunities here in the near future. We had this big face ripping rally all the way from 25 up to where we're currently trading at 29. Start slowly if you're going into long positions now. Don't just dump the short position and then go all long. Like, don't do that because this can turn back around. This could just be a juke out. Scale in slowly and move away from the short position slowly. Don't jerk your portfolio around and just suddenly whipsaw things around in both directions. Just cool out, take a deep breath, and then carefully calculate where you see entry and exit opportunities. Right now, the market is currently rejecting. We're finally seeing things cooling off. We did have this huge rally that hit very suddenly after a massive gap down. Right now, we've got a lot of mixed signals from the market. HYG is net break even on the day. It also pushed very hard, and now it's getting some rejection. We're seeing that on both the 15-minute and the 5-minute. We have a tweezer top on the 5-minute. On the 15, we currently have just one very long wicking green candle. We're waiting to see how this red candle prints. If it engulfs, then that's a sign to me that we're going to head back down for a while. Still haven't sold any short positions, still watching and waiting to see what the market's going to do for the duration of the day. We want to be patient and move slowly. We don't hesitate to take a trade opportunity when it's in front of us, but we don't make knee-jerk decisions. Dollar index is starting to see a bit of a bounce. Let's find out where this moving average is. Okay, so this is on the 1 hour 200 daily moving average. Dixie is bouncing. So this is a good technical bounce right here off the 1 hour moving average. This is a 1 hour 200 period moving average. Everything about this says huge liquidity hunt rug pull. So I'm not keen to get in a rush to exit my short positions right now. That's what panickers do. So we're not going to panic. We're going to carefully calculate this. All right, so NVIDIA, my position in NVIDIA is still not doing very well. NASDAQ is also going crazy. Let's see, who are the movers that are pushing this right now? There's NVIDIA and Microsoft both pushing it hard. Apple also pushing hard. It's now starting to print an evening star. Google also printing an evening star. JP Morgan is still ripping. Meta, evening star. Microsoft, evening star. Netflix, evening star. Tesla, still going. Okay, so everywhere I look in the market, I'm seeing evening stars. Everything is saying that this is not the time to go long. There will be better opportunities to get into a long position. Feel free to start scaling in if you have some extra capital that you're looking to go long for the long term, like way out till November, December. But make sure that you're giving yourself some time and you're making that entrance slowly. Not financial advice. Okay. Now we're finally starting to see some rejection on the 15-minute and on the 1 hour. HYG is starting to run into some trouble around its 200 period 5-minute moving average and the 100 on the 15. Hey, Darkside Trader. It's been a while. Nice to see you again, dude. Appreciate it, homie. Hey, homie. I have no idea what the Chinese characters say, or I don't know if those are those Korean? I'm going to go with Korean. I can't read it. I don't know what it says. But I'm reading your messages. I'm sure the market will turn around as soon as you post it. That's a good play, Darkside. I like the I like that you're playing the volatility to your favor. Catching that huge dip. That was well timed. I did not expect it. I was not playing that move. I thought that the CPI was going to lead the market further down for the week. Instead, we got a huge sudden rip to the downside, and now it's driving up higher. So I got caught on the wrong end of that trade. But we'll see. I don't think that we've hammered out the bottom just yet. I think that this is a little bit too early for us to say that we've bottomed. But if you're in profit in short positions, like if you are already in profit in your short positions, it's a good time to start getting out, scaling out of those. If you're still net short and you've got some out of the money options in the short positions for the rest of the month, those are the ones that I'm hanging on to just to see what's going to happen for the rest of October. If I see more convincing evidence that we have hammered out a bottom, then I will go all long in the market again, and I will catch the next rally to the upside. Those opportunities will happen again. We will get those chances again. Your favorite trader's favorite trader. I love the name. Yeah, I'm not. I'm not calling a bottom in one day. Yeah, I'm absolutely not doing that. I'm saying that it could be the bottom. It's possible. There is evidence to support it, but for me, it's not enough evidence. So I'm patiently waiting to see what happens for the rest of this next week or two. ICT students know that this was another short entry, more downside coming. I'm not familiar with ICT, but stop hunting on shorts confirmed. Interesting. Well, we'll see. We'll see who ends up being right. Believe me, I would love to still I would still love to be right on this call. The move was just, it was so violent, it just made me suspicious, you know? It's just like, we just had a terrible CPI print. The data is calling for rent and utilities to keep rising. Oil is ripping right now. The dollar index sold off in the morning like it always does. And I know that that's because China's selling the dollar and selling bonds simultaneously. Like that's why I'm looking at these so closely. Like you look at these bond yields, okay? Look at the bond yields. They're all up, right? And normally Dixie is rising with bond yields, but right now Dixie is dropping like a rock. So why is that? I ask myself these questions. Why is the dollar getting smashed while simultaneously US treasuries their yields are flying? That is because China is trying to kill the dollar. They've been doing this repeatedly. Well, they're not trying to kill the dollar, but they're trying to save the yuan, is what they're doing. So they're selling US treasuries, i.e., US government debt. They're selling our debt that they've been holding on to for a long time in order to save their currency. And they're selling the US dollar. They're selling China's premier has instructed all the banks to begin selling US dollar reserves in order to preserve the yuan. And they are buying overseas yuan in order to accumulate it at any cost. And this is supposed to prop up their economy. But right now, China is basically floundering. You know, they're treading water in the middle of the Atlantic, or the Pacific, as the case may be. They are lost at sea. And their economy is collapsing as we speak. We know this. This has been ongoing. But they hold a lot of US dollars and they hold a lot of US Treasury debt. So when I see dollar is dropping while yields are ripping, that tells me that it's China making the move. And it's all their banks. None of our banks are doing this. And the dollar is still moving on an uptrend overall. It's not enough for just an entire country, even one as big as China, to all simultaneously have its banks selling off the dollar and US treasuries for it to collapse our economy right now. And our banks right now are loving the rise in yields because it's a better fixed return. So they're able to purchase more. Me, it is Korean and it means human, Saram. Then that is what I will call you. I will call. Would you prefer Saram or human? I've never learned a single word of Korean, so I would love to know. I love to learn at least some words of different languages. I find it fun. I made a lot of friends when I was in the U.S. Army. I got to meet I got to meet a guy from Belarus. I got to meet someone I got to meet Iranians and Iraqis. I've met a very, very tiny Vietnamese woman. She was so small. And we had to carry, we, I'm going into story time. I was in basic training in Fort Leonard Wood, Missouri. It was the height of summer and we had just had a tornado and massive rain. And then we went on a field training exercise shortly after, and the waters, like all these mud pits had formed. And this tiny, like she was 4'4". She was so small. And I was like, how are you even a soldier? But anyway, she was so adorable. This tiny woman hauled around this massive 50-pound rucksack, this giant backpack with a rifle fully loaded with ammunition for 15 kilometers. And the only part of it that she couldn't do was this giant ass mud pit because it was literally so tall and so far she would have drowned. So she had to be put on somebody else's shoulders with her rucksack and carried over it. And this guy was tall. and this mud was still all the way up to his chest. Like I had mud all the way up to my neck walking through this thing. But it was just hilarious seeing this huge man with this tiny Vietnamese woman, both of them wearing these giant backpacks. He was carrying a combined 200 pounds on his shoulders between her, his pack, and all of his gear. And it was just the funniest thing watching these guys trudging through like 4 feet of just mud. Okay. So it's a bit early to tell yet, but I'm starting to see signs of a top. We're not going to front run this time. We're going to be really, really careful here. We're not going to front run this trade. We're going to look for a clear engulfing candle to the downside that breaks this bull flag. We're going to watch this very carefully. If we're right, then this will turn into a head and shoulders. We'll have our shoulder here, a head here, and by the end of the day, another shoulder, and then we'll break the neckline by tomorrow. And we'll start to see the sell-off on Friday. But we have to wait for an engulfing candle here or at the very next 15-minute candle. We've got a really nice inverted hammer candle forming right here on the 15-minute. We've got 6 minutes left in the candle. If this turns into more of a meteor candle, just goes all red, full body, then this will look much better for a short trade. And we can average down in our short positions. And we will try to see how we'll see how it goes. I'm just so shocked at how explosive this move was. Like, this was definitely short hunting. Like, they were absolutely hunting shorts here. The market is moving clearly against the logical decision. So they were absolutely going after people in short positions. Now, in my regular portfolio, I'm just trading options. And for these types of moves with these swings, I'm not trading. I'm not trading with a stop loss. I just watch my portfolio and I exit when the time is right or when I'm sure that the trade has gone against me. But I don't trade with a stop loss like that. Most traders on Wall Street, however, they are trading with stop losses, especially the day traders on the floors and at various firms. Plus, they're targeting retail. Like, retail traders are the target here. Day traders and people, mom and pop traders working from their home office are the target. All right, we're getting really close here to printing a gravestone doji on the 15-minute candle. The volume is pretty much gone now. So bulls are getting exhausted. SPY options flow. That's actually a good point. I haven't looked at SPY options flow in a hot minute. I've been going based off of my technicals, trading strategy, and macros for a while, and I haven't been paying as much attention to the options flow, but that's worth looking at because I want to catch the individual stocks as well that are looking to make a big move, and I don't want to I don't want to miss big movers. Okay, we're starting to get that meteor candle, that inverted bull hammer. Or that inverted hammer candle is exactly what I was waiting for. Now we're seeing it. 5-minute tweezer top with an engulfing candle. Okay. Now we have a short trade. Now we have a double top. Now it is confirmed. You can wait for this final candle to print on the 5-minute. If this candle closes below the body of this green candle right here, if you get a close below this level, then you're confirmed. Good entry for short position. Now is the time. But we'll go ahead and jump into this right away. And we'll try to capture some profits on the way down. I'll go ahead and mark this on my trading account as well. I'm going to place this at the top of this gap right here. This is going to be my stop. And I'm going to take my take profit all the way back down to the bottom of the move today. This is going to set me up for a 2-to-1 risk-reward ratio. This is going to probably take a swing until next week. So anticipate that this will take some time. But I want to set myself up for a good, solid winning trade on this one. I'm going to set myself up just below this gap. And where are my liquidity pools? Okay, we hit the liquidity pool. So this is this. Okay. That does confirm that this was a liquidity hunt. We had the big spike through 1, 2 candles recaptured on the 5-minute. On the 15-minute, you had it recapture in a single candle. On the 1-minute, let's see if this qualifies. 1, 2, 3, 4, 5. Yeah, this qualifies. This is a liquidity hunt. This is an example of a liquidity hunt. Let me go ahead and get an entry on this trade. I'm setting a tighter stop loss with this knowledge now. So this is going to become a 3 to 6 or a 3-to-1 risk reward ratio. I don't recommend trading with a tight stop loss like this. Trade according to your risk management strategy. Don't just copy me, okay? Let me get that out there first. But I'm going to take this trade after watching this this last move here. We've gotten a rejection off of the 200 average on the 15-minute, and we cut through a level of liquidity, and we re-entered the structure. We had a break of structure, and we re-entered the structure within 5-minute candles. That's 5 1-minute candles. So this fits the qualifications of a liquidity hunt. So what is a liquidity hunt? For those that are new to this channel that haven't seen this before, you can check out the video that I have on liquidity hunting that will explain this in more detail. But essentially, with a liquidity hunt, what you are looking for, a liquidity hunt is essentially when a large institution, particularly a market maker, is trying to enter into a position with a very large transaction. They are trying to get a huge trade in. Now, in order to fill that trade, they need to get a whole bunch of liquidity together. They need to basically target a bunch of traders that have their stops located at a very specific level. So, in order to do this, what happens is you'll see a trading structure like this one. We have what is called an asymmetrical structure. This is a channel, basically, where the market is bouncing between different levels of liquidity, and it's making a decision towards the downside. Now, this structure was broken here. We had a structure that you saw was a channel that I had drawn right here, and we were trading, bouncing around in this range, right? And it was a descending channel. These do tend to break to the upside. Now, what's happened is a market maker needed to get a fill to the downside because they're anticipating a large move to the downside. They're seeing an opportunity for a downside trade. So what they have done is they have sent the price skyrocketing in order to hit various levels of liquidity. Liquidity is just an area where there's a lot of trade volume waiting to happen. There's limit orders, there's stop losses, all kinds of trades just waiting to occur. And that is what is marked by my HTF liquidity indicator. It may be hard to see, but there are some levels right here and levels right here. Now, these are small levels of liquidity, but this one was quite large. The reason for this large area of liquidity is because we had a gap down here, and this created an area where a lot of traders have concentrated their stop losses. Well, actually, it was right here. This area where all of these stop losses were concentrated at, and limit orders also, is where the market maker makes their trade. So in order to get this trade, the market maker will allocate a certain number of funds. They will position the market so that they get a whole bunch of short sellers into the market. They trade the market to the downside just like so. They get the market moving downward like the direction that they want it to be at. And when a news event can absolutely be a trigger, just like CPI. CPI is a perfect example. So we had the CPI report and it ripped to the downside. And then what did everybody do? They immediately hammered into short positions. They just knee-jerk jumped into the short positions. They didn't predict the print. They didn't predict the move that was going to happen. And they immediately jumped into the position. And most traders, if they're trading responsibly with a risk management strategy, they traded with a stop loss. And you will note that the stop loss is always going to be at least somewhat reasonably tight. Even if I'm trading with a 2-to-1 risk reward ratio, and I were to say that like SPY is going to go all the way down to 336, it's pretty far away. But if I was trading with a reasonable risk reward strategy, this would be it. And of course, the market maker sent the price going in the opposite direction, and that hit their stop loss. But not only that, they're hitting the stop losses of everybody that front ran the move here, here, all the way back up to here. And they were able to hit all these various levels of liquidity. Everywhere you see a major area of resistance, like here and here and here, each of those represents an area where there's a significant pool of liquidity. Orders that are waiting to be filled because they represent an area where many stop losses are sitting at. So there's a lot of defenders, there's a lot of people selling in those areas, hitting the price downward. So the market maker allows the price to go to the downside before they use all of their power to drive the market through all of these. They kill all these stop loss levels and they get their orders filled to the short side. So they get another order that fills them at that level, taking up all those short positions. So everybody that's getting stopped out and buying to close their short positions, the market maker is taking those shares and they are shorting them back into the market immediately. And once they've gotten their fill, once they get their full position, they send the market ripping back down to the downside. And that's what we're beginning to see. Now, this takes place on multiple time frames. It can happen on the 1 minute, the 5 minute, the daily. It happens all over the place. What I find consistently helpful is to look for major areas of support resistance on the 1 hour chart. And I use that to give myself an idea of where those liquidity pools are sitting at. And I haven't been looking for liquidity pools for a while. Had I been paying attention, and as soon as I saw this move going against me, I probably would have thought twice. But I was just like, I'm funning around and I'm trying to have a good time. This is just paper money, and I'm messing around, so I'm not thinking straight. Like I'm not in my trading mindset when I'm making these, and that is where I went wrong here. I did not stick to my trading mindset, and I didn't think like a market maker. I didn't think like an institution. Now that I see these liquidity pools, I can see where the market maker was driving the market to. And now that I know that since the price hit this level, and when you look at the 1 minute candles, you can see it clearly. They slammed these huge candles. It slams through each level of liquidity. They hit this one here, they hit this one here, and they hit this one here. All of these liquidity levels got hit in very specific ways with very powerful moves, strong volume, and then it comes ripping back down very quickly. That is a market maker acting on those liquidity levels. It should all be illegal. It should be, because it is market manipulation, but there is no way to stop them. There is no way to do it. You cannot stop them. The SEC, good fucking luck to them. They're not even trying, but if they were, good fucking luck. They're not going to stop these guys. These institutions, this is what they do. They have computers that do this automatically. It's not even like a personal attack. It's just a calculated decision made by computers. You are the prey. That is how you have to treat this market. This market will eat you alive if you let it. You have to look at this, and you have to treat the stock market as a place, as a device, as a vehicle designed to steal from you. What you are trying to do is you are trying to steal from somebody else. It's a very cynical way to look at it, but it's honest. The market is trying to steal. Everybody is trying to take something from someone. You're trying to take money from somebody else who's making a bad decision. And somebody else is trying to take money from you, thinking you're making a bad decision. It's not personal, it's just business. Yes, that's exactly. There's no grudges, there's no personal warfare between individuals happening here. It is people trying to outsmart and outplay each other for money. The sad reality is that those with the money are probably going to win. So it's better to look at the market and look for where those areas of liquidity sit at and understand where the market maker is going to make those moves happen. Where are they going to move the market? And if you look at what just happened today, we had multiple areas of liquidity knocked out by this huge move to the downside, and then we ripped back up to the upside immediately after. We cut through a huge gap of price action, and now we cut through even more back to the upside. The market maker, they're just trying to make their cash. So this is where they're at. All right, so let's go track this and see where the market is currently at. We're at around 361.50. This is still a bull flag. So before you get too excited, be sure that this breaks down before taking any trade. We're still looking for that confirmation that the market maker, that the institution is going to take the price back to the downside. Can I do some TA on Tide? It hasn't moved a whole penny in 3 trading sessions. By that statement alone, I know that my TA won't do anything. I'm just being honest. Unsurprisingly, it is a barcode. BBIG had to go through this too. There's no technicals that I can do on something like this, man. I'm sorry. Technicals don't work on a barcode. You need a WASP scanner for that, so you can go get your coupon. This is just algorithms trading back and forth, trying to fight each other. There's nobody really even trading this right now. The volume is so low. If I go back all these trading sessions, like this is a combined 6 million shares traded. That is nothing. Okay. Let's keep a close eye on the SPY. If this bull flag breaks at any point, we're exiting the trade and we're flipping long. That's the plan here. Okay. Anything like that happens, we see the bull flag break. We're switching back to the other side of the trade. So I'm going to have this ready to go for a moment where I see that bull flag breaking, because this can still be wrong. If you're day trading like this, and I'm not a day trader, so like this is not how I make my money. I swing options. So if you want to watch a day trading channel, I would say like be careful using my strategies, because I'm looking at this like a swing trader. I don't look at these like normally I wouldn't even be taking stops on things like this. Like I would go buy some calls or I would buy some puts. If I see the position going against me, I close the puts, buy the calls. Just very quickly switch over, and I lose out on a few percentage points for an hour, and then I'm back in the green shortly after. So trying to do this with a paper trading account where it's just shares trading flat, that's a little bit harder to do, but I'm trying to help illustrate like good entry opportunities and good exits and stuff. So I hope that this is something that people are finding helpful, at least. Let me go catch up with Discord chat. I'm sorry, I realized that I'm in the wrong place. Hey, Game On, I'm sorry I missed your message from earlier. I think that I explained the strategy on UPRO, but the strategy, air quote, is that I am playing UPRO to the long side for long distance. I'm looking for a long play on UPRO to take my trade out till December. The idea is that I am playing seasonality. I am seeing that on average the stock market will have a rally going into November, December for the holidays, and that coincides with the current conditions of the market that we're trading in. But here in October, we have another downside leg that we expect for the second half of October. So I'm short for the short term. I am long for the long term. So I'm short for the next 3 weeks. but my UPRO calls, they expire December. That's how I'm playing it. And if the UPRO goes down while SPY is going to the downside and my short leg is winning, then that's good. I will take profit on my short leg and I will look for the bottom to come in, and then I will scale more into my UPRO, because that I'll be taking profit on the short leg that I know I only have a limited amount of time to take profit on, and I can go long out till December or January, whatever, and I can play that rally as it occurs over the course of the next several months. SPY making a megaphone starting October 10th. I didn't consider that. Let's take a look. Well, if I follow this, it could be a megaphone. Persephone, you tell me if this looks like the megaphone that you had in mind. I see Savvy talking about Nicola doing a cup and handle. On the 15-minute. I kind of see it on the 5-minute, but I guess I see it. It's more like just a consolidation range to me, though. I wouldn't be calling it a cup and handle unless I saw this thing just suddenly turn around and take off here and then do one of these. I can kind of see it, but when I see it trading in this range like this, my inclination is just to say no. Let's catch up with FedEx. I was just talking about the FedEx trade that I was looking at here. Now this does look like a cup and handle. This does look like a cup and handle. It's a very weird looking one, but it does hold up. We've got a big V-shaped recovery here, a retracement, and we have hit a floor, and now we are returning back to previous highs. Need to see FedEx break above 160. there is a huge gap here, all the way up to 180, or 200, all the way up here to $200. So I'm going to add this to the trading floor. I've got the paper trade in. If there is going to be a holiday rally, FedEx will benefit from it massively. If I go back out to let me actually go back out to the monthly chart. And let's go see how FedEx performed consistently in its winter months. So it didn't do too good during COVID, December. October, November seems to be kind to FedEx. November, October, had a bad October in 2018, but so did everybody else. All right. November, December, January of 2017, all very good and green. November 2016, very good to FedEx. Saw a move up to 191 from 170. October and November of 2014, it moved 10.5% from 160 all the way up to 177. Ooh, look at this one. October, November 2013. That was not actually a great year. Moved 20% from 137 to 156. Let's see how this tracks with the SPY. It does correlate. FedEx definitely correlates with the SPY.
You should go back to your chart, watch your flag.
Thanks, Logical. Appreciate the heads up.
Yep, I'm here watching out.
We're still trading in it for right now. I'm going to close in my stop loss a little bit. Because if this breaks the bull flag again, I don't want to be in the trade. And I want the trade to close automatically. Let's see. IMPPDD still stands. Imperial Petroleum, it's been a while. The trade is still there, but IMPP is like, I was betting on the oil situation to get more ugly in Russia and for the pipelines to continue getting shut down, but it happened and IMPP didn't really move, but neither did the oil market. Now the oil market's moving, so I'm wondering if shipping is going to get better, more attractive, and it's going to be better for IMPP's business. We'll see. But IMPP's short squeeze, as far as I know, they still have relatively high short interest, but it's not as extreme as it was. All right, this is starting to get a little bit nervous. I'm going to tighten up my stop loss here. If it's going to reject, it's going to reject here. Man, the volume got really low. Hey, Boomer Assassins. I'm sorry if you're feeling a little extra angry. You want to tell me what's going on, homie? Yeah, Darkside. I use the 1 hour for looking for trends and structures, and then I use the 15-minute to trade. I'm usually buying on 15-minute patterns. Okay, this is gonna hit. If this breaks the bull flag and closes on this, then I am exiting the trade. It's switching long. And I'm going to get ready to swap over. We're waiting for the candle close. Just teasing the stop loss.
If you zoom into a smaller time frame and set the top trend line on the tip of the candle on the smaller time zone, it's out of that flag already. Well out of it.
Yep, I agree. Like I said, I trade on the 15-minute because I don't like to be too hasty, but this is going to close outside of it, so I'll go ahead and just force close the position here, and we'll switch long right now.
I'm looking at the pullback retest possible for an entry.
Mm-hmm.
It's hurt today, man. This was wild.
It was really wild. Very unexpected. All right, so we're going to play this retest. I'm going to set my stop loss below the wicks inside of this bull flag. And we'll do a 500. Only the institutions win. We're just here as a guest. That's what we learned today. Yeah, I've made that mistake too, Assassins. I've gotten into that problem before. Getting into too many plays does it does come back to bite. It does come back to bite you. Hey, Logical, could you speak up? I'm testing volume. Somebody was saying that Discord volume was a little too loud.
Test 1 2. Test 1 2.
Thanks, dude.
Yep.
That should have it. I'm gonna get my fill. There it is. Okay. Okay, we're gonna be on the right side of the trade this time. So this is distinctly a bull flag. I want to exit this trade today, actually. So let's be more conservative with this one. We got to take more consistent gains on this one. I was doing fine when I was doing like, tight risk reward setups with like 2-to-1 and stuff. There's no way this flagpole plays out. We might get halfway there. At least not today. I just want to get back a little bit of what was given up in the paper portfolio. That was quite painful. I gave up 6,000 on my paper trading portfolio, and I was working hard on this to work on some nice new strategies. So I feel a little bit burned. Not as burned as if it had been real money, but I do feel slightly burned. I keep seeing stuff about DWAC hitting on the chat. What the hell? We've decided not to liquidate everybody's money yet. Let's buy. What the? So stupid. This whole SPAC is just it's such a disaster. Well, seeing as it is possible that I was wrong about the bottom, I will consider getting a little bit more on the long side today. You know, if anything, I would treat DWAC as like the fact that it's ripping like this right now as a sign that it is ever more likely that they are going to be forced to liquidate. The problem is that like the puts are stupidly expensive. They're way overpriced. But it's because that people know that it's done. The SPAC is done. It's going to go down. It's going to die. But there's like no profit to be made buying the puts. So, yeah, whatever. Okay. Well, today's been a really annoying day. Let me catch up with Discord chat. I'm very sorry that I'm bouncing around all over the place and I'm losing track of the chat. Somebody said something about UK news. Well, Jake from State Farm says, "Hey TD, what do you think the outlook will be for PRTY? Halloween spending supposed to be sky high this year." That would be pretty. That would be pretty lit. But I don't know anything about PRTY in this party city. Was this a short squeeze play? It's not one that I've been watching. A double bottom on the monthly. I need to close this SPY chart. Hold on. Bullish divergence looks nice. But still in a big downtrend. Well, it went on a serious run for August. Their earnings were good too. Revenue was down slightly though. Hmm. If they set really good expectations, I could see Party City going for a run. They have a really similar chart pattern to what they did here. They had a gap down and a floor, and then they rallied and then set up a higher low and a floor, which is similar here, but they return back to that floor. So I'm not confident that it would go on the same rally for the year like it did last time. Also, we were in quantitative easing at the time. So it's much harder for stocks, especially ones that are losing money like Party City has been, for them to, excuse me, it's much harder for them to get momentum going. Investors are losing money everywhere, all over the market. Like, nobody's having a good time right now. It could be a good trade. You do have, oh, nope, that is not bullish divergence. I believe that is a hidden bull, actually. Higher highs, higher lows on the price, and lower lows on the RSI. The dollar index is getting hit by China selling the dollar. That is entirely the reason why we're seeing the dollar dumping. And it is part of the reason why the market is being propped up right now. But look, guys, like it's not a big deal. And I don't want to say that like, no, you lost money. That's not a big deal. Like, that's not what I'm saying. Like, there's always plays. There's always opportunities. And even if we're wrong on this one, it's okay. It's okay. We will come back. All right. So UPRO is looking better for the long term. So I still think that it is possible that we end up hammering out a bottom. So I know for a lot of people this isn't really an option to be both short and long in the market at the same time. But my ideal trading strategy for this situation right now that we find ourselves in is to slowly scale into long dated call options on UPRO, something like December or January of January next year, and staying close to the money. Those are relatively expensive options. It is going to cost a bit. If you're not able to do that, you can go a little bit out of the money, or you can wait and see how this market plays out. Right now, we're in a really choppy, really volatile market. So things are really rough right now. I know you guys are upset. I'm really sorry. I know that this is rough. If things are getting like too rough and you can feel yourself getting angry and emotional, then that's the time when you need to step away from the terminal, decide what needs to be closed later when you have time to just look at it objectively. Don't make these decisions when you're upset. Take a break, step away from the terminal, go get yourself a cup of coffee, have a snack, go get some lunch. Just get away from it. Just walk away from the terminal for a little while, okay? I blew a bunch of money in the paper account just today on 3 back-to-back bag trades. And I know that that's paper trading money, but I'm trying to hold this same opinion when it comes to real cash. As long as you are sticking to your risk management strategy, then it should not matter. So don't get down on yourselves. Just try to breathe and work your way through it and figure out a new decision. Okay, so we have in front of us the possibility that the market may be turning around. So let's start looking and seeing what we see. If you're still in some short positions on the market and those are not worth selling anymore, then you can hold on to those and just see what happens, because we still did have the CPI print, which was extremely negative. And if you want to take that risk off the table, if it's still worth something that you can take some money back, then go for it. Do it. Whatever you decide, make sure it's a clear-headed decision. That's what's important. Make sure that you are making a clear-headed decision. Let's go take a look at the VIX and see what's going on. We've had a lot of contrarian indicators going off. So, yeah, we've had the VIX wicking through this top here several times now. So that is part of my concern that this could be the bottom, is that the VIX has been crossing through this level multiple times. We had a close above this. We had multiple closes above this area on the VIX, and the big move to the downside, I honestly should have thought about this, but the move to the downside that we had in the market should have been confirmed with a big pop in the VIX, and it didn't. So I wasn't looking at this. And seeing that the VIX has not moved up at the open of the day, it actually opened at the exact same place that it closed at, or that it had opened at the day before. That is actually a sign that the market was bottoming. So I'm still waiting on an additional confirmation that this is the bottom of the market before I jump out of everything. Just catching up with chat, guys. Sorry for the silence. All right, let's check this out. Okay. Let's see what happens. Amazon's still down on the day. Apple is green and testing its 200 moving average on the 15-minute. Tesla's printed an evening star. It's currently up on the 1 hour. Nvidia printing a bull flag. So these are our big heavy hitters that we're watching really closely on the SPY. JP Morgan's also ripping. It's up 5% today. It's like the only bank that's actually making money right now. So they probably need to be investigated by the FBI. All right, Boomer Assassins. I hope you. I hope you're able to take some time just to relax and just cool off for a little while. I know that this was a really rough day in the market. If this is the bottom, then we'll start to see some more movement in the risk-on sectors. Tech and finance will probably make some big moves. Probably start taking a look at opportunities in like TQs or something. If you're not familiar with TQ, that's basically UPRO to SPY. What UPRO is to SPY, TQ is to the Qs. So you can bet 3 times leverage on the Nasdaq, and that is another trade opportunity that you can take. If you're going long on the market for long term, then that's a worthwhile one to look into. Because the risk on sector is the one that moves the first when there is a reversal. So you're going to give yourself the best chance to be correct. So if you're looking for long in the Qs, TQs is the way to go. You can see that just like the SPY and the NASDAQ, this put in a lower low here. And we're actually printing a very similar move to what happened here. So we will see if this is, in fact, the bottom. We'll probably know for certain next week. But on the off chance that this is the bottom, it's a good time to start thinking about switching long for the long term and getting ahead of this rally. I know that today hurts. Like the flip day really hurts because you're never ready for it. No one's ever ready for it. And the CPI numbers were awful. We know they were awful. We were certain that we were right. The institutions made their decision. They got the print they wanted. They drove the market down. They suckered in a bunch of people in to take a short bet, and they just used brute force with millions and millions and millions of dollars that we don't have to take the trade in the opposite direction and take our money. That's how they work. It's what they do. So the only way to come back from this is to reevaluate, go back to the charts, look at what's ahead of us, and remember seasonality. We see a turnaround November, December. We knew that a rally was coming at some point. We thought that it was going to come later than this, but we should at least give ourselves a chance to catch the upside moves for the next couple of months, regardless of whether the bottom is happening today or if it's happening next week or next month. We don't know. But if you start now scaling in slowly, then if the market does start moving up, you'll start seeing green in your portfolio again. Things will turn around. We're now in man bear pig market. Captain Insano, that's amazing. It's man bear pig. I'm super cereal. Netflix is popping. Yeah, it's time to get out of this Nvidia trade because it's wrong. Netflix has been moving sideways for a while. Got to take our lumps and turn around. I mean, hey, we went on a really good run. We caught basically every move to the downside that the market was making for the last, like, we almost hit the top perfectly. Let's not get too upset. We nailed the top. We rode the SPY all the way down. We rode the Qs all the way down. We took SQs all the way up to $60 twice. We did really good. If you can do that well when the market is going way down and everybody else is just getting destroyed, think about how well you'll do when the market is trending back up. Right now, we're in the reversal phase. Things are just getting really choppy and really volatile and unpredictable. Nobody knows where it's going to go on the day-to-day. This is where day traders get hurt. Now it's time to start taking profits on the short legs, looking for opportunities to get out, exit, find your turning point. Yeah, appreciate that, Dwix. I'm not. I'm certainly no prophet. I'm not going to get it right all the time. It's all about being right between 60 and 70% of the time. There we go. So far, we got a green trade. If there is another rip down, any kind of gap down tomorrow, then I see another bottom put in. If we get another higher low on SPY, then we know that this is the bottom. Okay. I'll give everybody some signs to look for. There was one sign that was telling me that this could be the market bottom. I need to take away the trade execution arrows. They're so distracting. There we go. All right. So we need to always be looking for signals and confluences whenever there is something like this going on. One thing that I had noticed was that while the SPY was making a lower low, HYG did something else. And this is on the daily chart. So for day traders, this is easy to miss. But day traders have to look at this. You have to look at this. HYG sold off just like the SPY did, but we had a higher low. Now we gapped down pretty hard today, but the SPY made a slightly lower low right here. Before today happened, we had a lower low in the SPY, very slightly lower low, and we were getting bullish divergence on the RSI, so the RSI was moving up. with higher lows each time that we had hit a low. So this move to here was matching with this move to here. Small move to the downside, RSI moving up. That was one confluence saying that this was a time for a reversal. HYG had printed a higher low. And that's a little bit surprising. But this daily chart shows that our market was getting ready to turn around on us. Got to zoom way in for this. It was so slight. It was so very slight. If you didn't base this off of the wicks, you could have based it off the bodies. And it's a little bit more obvious, but only slightly. It was a subtle difference. So subtle. But the HYG diverged from the SPY this week. And as we started heading up, things started to get really weird. Things started getting weird. So this is part of why I was looking for, like, how can I be wrong? What did I miss? What wasn't I thinking about? And as soon as we started heading up back to these heights again, my mind immediately went to, damn it, the HYG diverged, and I should have taken my profit when we were all the way down at the bottom. I thought that the market would need some time for the CPI print to fully play out, and it may still need time to do that. But institutions are flipping right now. They're switching over, and that's what's causing all this volatility. They know what's up. They know where this market is going. They're seeing it going back up. And it doesn't matter if it's going to go up fast or slow, they're going to play the trend. So they're turning this whole thing around, switching back to the long side. Okay. And keep watching this FedEx play like it's going to gap up. It's going to gap up. Like I'm getting all excited. SPY is a true meme stock. It really is. Wow.
7 touches on that line I drew, TD.
Was that numbskully?
Yes, sir. This 8th time it broke above it.
You are right. You are right. Let's go ahead and lift this. I want some of my cost back. I'm not expecting a full measure move on the entire thing, but I will go from this low. Okay, we had the breakout here. That seems so far-fetched. Well, it's not the time to hesitate. Took some bad hits today, man. Okay.
That candle closed above the line.
I am going to have to stop for a work call. I'm going to leave the stream up, and I'm going to put it on my automatic charts. I'll move these over to the 5-minute. Just so that it's a little bit interesting. We're watching SPY, HYG, and the bonds. 10-year bonds contain the secret. If I see HYG create a higher high today, then I will confirm that the bottom is in. Okay, I'm going to take a quick break. I will see you guys in a little while.
Hello, 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 hello. How's it going, everybody? I'm back, finally finished with that stupid meeting. All taken care of.
Welcome back, boss man.
How's it going? All right. So, I like the engulfing candles that I'm seeing here. We have one little retracement candle, and then we immediately engulfed it, and we're still going to the upside. Very nice. Good trend. Happy to see that. Okay, things are beginning to look a little bit weaker on the SPY now. We're getting another bearish divergence. So if this green candle does not overtake, then I am going to probably close this short position. In fact, I'm going to take some right now. I'm going to take 90% of the position right away. I'll let the rest go. We'll see how it does if it gets to the final take profit. But this was a nice little itty-bitty profit after a otherwise pretty brutal day. I'm waiting to see how the futures and the SPY create this new top, but the HYG has printed an engulfing red candle with a 3-line strike, so I'm thinking that it's probably about at the end of its run for right now. I'm going to redraw some of this stuff. And then I've got a few folks who were asking about a couple of other things. I was so sure that this was an ascending wedge earlier, and then I second guessed myself. But I think that my initial impression was actually correct. Yeah, I'm not sure 3,700 is in the cards today, actually. My initial impression is that we retrace tomorrow. I'm thinking this is going to be it for the run. The SPY has been getting a little bit weaker with each move. The volume keeps coming in on each retrace, but I think that this one is going to be the last one because we had a lower high here on the RSI. That's bearish divergence. We had another lower high here as well. It has yet to market, but that's distinctly bearish divergence. Had a higher high in the price action and a lower high on the RSI. The 15-minute is about to cross on the MACD as well. So For the day traders, this is probably the last trade of the day. Hey, Venusian. Good work on the quick scalp. I know that it's been a brutal day. We try to capture profits wherever we can. For those that are still struggling a little bit, I took the opportunity for the big surge in DRV to enter into some more DRV puts. So that is a long position on the housing market. XLRE, I don't know if you noticed, had a big gap down, and I entered into some DRV puts that were long dated for December. DRV is an inverse ETF that bets against this ticker, the XLRE. So when DRV shot up past 80, I went and got a position, and it's already doing quite well. I'm anticipating that this will go down over the long term for some time. I don't know if you can tell, but this move right here looks to me like the end of its run. DRV has done this before, where it will do a little cup and a second top, and then it will just die off. So it just did it here again. Yeah, this is already a 13% move from the top. I didn't get the top, but I got pretty close. So that was actually pretty nice. I was rather happy with that. I'm going to hold that for a while. So still a red day, but thankfully we are pretty well positioned and well hedged for the market going into tomorrow and next week. Kind of positioned both ways, straddling the straddling 360 on the SPY. So if there's a move down in the short term on SPY, I will be taking advantage. I'm kind of expecting that SPY is going to get knocked down here from the 15-minute, or I'm sorry, the 1 hour moving averages. Let me zoom out and look at the last time that we broke through these moving averages. And the last time we broke through these moving averages like this was in September. They're much closer together now. And the market's moved up pretty aggressively. I'm going to close the rest of this long position, and I'm going to switch short on the next sign of weakness. Which it looks like I'm already starting to get. I'm going to set my short position there at the top of that gap. Or at the start of the gap, actually. I'll put it at the evening star. Okay. We'll just wait for that to fill. Should be getting it here in just a second. Come on, TradingView. Thank you very much. Okay. So we've switched short on the market. My reason for that is that the volume was starting to get a little bit lower. Our moves have become slightly weaker each time, with the RSI printing lower highs on higher highs in the price action. So we went from here to here, then from here to here, and the RSI has just been going lower. So the moves are getting weaker each time. This is a 3-to-1 risk-to-reward ratio trade. I'm taking a $250 risk. This is going to set me up for a trade back to the downside. The SPY's been ripping all day long, so I'm okay with carrying this trade into tomorrow. I'm kind of anticipating the SPY retracing pretty heavily by morning. It's actually not a half bad time to consider like a 1 day to expiration put contract also. Sometimes they can work out pretty well. Let's see, what's the futures market doing? It's also two-topping. And I mean, this is set up pretty nicely for a head and shoulders as well. The other thing I'm noticing is that we have what looks like a 3 drives pattern. Three drives they appear very frequently in ascending wedge patterns. It's definitely not a perfect 3 drives. But it fits the bill. The futures market is also printing a bearish divergence on the RSI. I'm not sure why the TMA indicator hasn't printed it yet, but it's definitely there.
TD.
Mm-hmm.
I have a surprise for you, and I'm going to post it in the live stream chat.
Oh, what? What is that? Is that just like drawn on with marker, or is that like...
No, that's
what is
been
it?
Legends metalwork.
Oh, no kidding. Dude. That's lit.
Yeah, it's lit.
Ben, that's pretty cool, dude. Bro.
Thank you, Ben. Just received it in the mail, buddy.
That's awesome. Okay, we just had a close below. Okay. So HYG just created a bearish gravestone candle right here on the 5-minute. We have a gravestone doji right here on HYG, and it is closed one large candle. It closed one very large candle below the 200 period moving average. And now we have a double top that's formed here within this ascending bullish triangle. I'm wondering if HYG meets the bill for a 3 drives pattern. No, it doesn't. Because it hasn't made higher highs. It's been pretty much even. It doesn't fit the bill. But it is still breaking down, and SPY is now getting ready to close below this descending wedge. Okay, we got our bearish close. Let's see what happens. Looks like the market makers are going to rug pull us again. Yep, they're trying to whipsaw everybody. So, we catch the market makers' moves. We predict what they're going to do. If we just understand that they are trying to defraud everybody and they have enough money to make it do whatever they want, we just need to think, what's everybody else thinking? Oh, the market moved up on bad CPI numbers. I guess that means that things are going to go well. We've hit the bounce. This is the bottom. Not so fast. The market maker decides otherwise. So, I would say treat this as a very small trade. Be very careful with your trading strategy, but I see a lot of divergences. We got 2 back-to-back bearish divergences on the SPY futures, the SPY itself, and HYG. I forget why I had Torrid Holdings up there, but if we go and look at the bonds, we can see that the bonds have been surging for a little while. And the dollar index, where do I have the dollar index? There we go. The dollar index is starting to bounce again. And we had bullish divergence. So bullish divergence right here. If you look at the dollar index, you can see that we printed a lower low here on the dollar, but the RSI went bullish. Go figure. So pay careful and close attention to what the dollar index is doing. This usually predicts a reversal in the SPY. And right now we are getting a little bit of an indecision candle. But we've still got a minute left in this 5-minute candle. Right now, HYG is fighting for its 200-period moving average. If it closes below it again, then it will have failed the test to maintain its price above the 200-period moving average on the 5-minute. And this is not to say that the market bottom has not happened, but I do expect some chop, and in the meanwhile, there's some money to be made. Futures are now tanking. So let's go put the moving averages up here. I'm going to go put the SMA on here. Okay. Futures are testing their 20. We've had one close below the 9. Looks like we're about to get a second close below the 9. We're testing support, and we close below it here. So now if the futures keep trending down here, then we're likely to get a nice pullback tomorrow. So if we do end up pulling back, I'm estimating we'll land somewhere around 36.50 on the futures market, or around 364 tomorrow when we gap down. And that will put us on track for a head and shoulders pattern. Or if this 3 drives pattern plays out completely on the SPY, then we will expect to retest the 362 and possibly 360 before we go and find our bottom. It's not certain whether we will go the full length of this move that created this ascending wedge. We did have a really full move here that saw us going 3%. So there's always the possibility that we return back to that previous level, and we could see a drop back below 355. It is possible, but I'm thinking that we are near the bottom now. So at the next big pullback, that will be the time to go and enter long positions, and then switch long for the market going out farther out. If you like day trading, by the way, I want to put this out there for those that like day trading a lot. If you are focused 90% of your effort on day trading, or even 100% of that effort, I might suggest take some 10% of your capital aside. And when you are seeing a move in a trend, if you're seeing the market move along a trend, you're normally a day trader. Try a swing, because I find it to be way less stressful as a swing trader. And I had a member that was asking me about Lux Algo, and I gotta say, I was really impressed with the overall performance of Lux Algo, which is a swing trading system. It is an algorithm built to assist swing traders at finding take profit and stop loss levels. And honestly, like, just trading those swings on it is so consistently good. I am thoroughly impressed with its accuracy. If you learn how to swing trade consistently with Lux Algo, I see no reason for you to not be a profitable trader. The problem is that it is pretty expensive, but a lifetime membership with Lux Algo will run you about $1,000. So it's not a cheap solution, but it's one that I'm actually considering because I like swing trading. It makes my life way easier, way less stressful, and it's a consistently profitable algorithm that you can use to assist in your trading. Anyway, the point of what I'm trying to get at is that if you are a day trader 100% of your time, you can just devote 10% of your capital to just buying something like a leap. When you see a trend in the market going somewhere over the long term, you see like you see the daily trends reverse, right? You get that golden cross move on the market or something like that, you know? And you're like, if your attitude is I'm going to trade with the trend and your day trading trend says that you go long on the market and then you wait out the pullbacks and then go long on the strength again, take a swing with an in the money option on the market and go long for like several months away. Like just measure out the moves for how long it takes for the SPY to make a decision on trend reversals. Like if you see the SPY doing, like let's just take the hourly chart for instance. And we saw the market turned around for, we'll just say right about here. The market turned at this level, and we saw the market withdraw about 11% just from the point that a golden cross was made on the 1 hour chart. If you took a swing on this, just a 3-month output that was at the money, you could have 10x to this gain, gone from a 12% profit to a 120% profit. And that long swing, while it would have taken you a long time to take profit on, if that cost you $1,000, you can turn that $1,000 into $2,200. So although swing trading takes a long time to let things play out, and it does take discipline, I find that it's way more rewarding and far less stressful to be able to trade like that. Okay. So I'm starting to look for more signs of a market reversal, and I'm beginning to see it now. We have established a higher low on the MACD, and we have higher lows on the RSI on the hourly. We have consistently higher lows. So you take a look at this move from here when we were trading at 390, and then we retrace down to 365. And then the latest move, we went all the way down to, we gapped down to 349. And the RSI has finally like hit a break-even point where it's like almost perfectly even with all of its latest down moves. This is a market bottom signal. Like this tells me we are very near the bottom. Now the RSI is very hot. We had a big move to the upside, very similar to this. We had a big move that happened really similar to this. What happened after? Big gap down. And we drove the market all the way back down. So it's very likely we see something like that again tomorrow. So be careful. Don't get rug pulled by, throwing all of your capital into something that's expiring too soon. But look for this opportunity. Look and read the signs. These technicals are very easy to read. And you see these trends play out in the market over and over again. Like let's go back to the May bottom. We had it right here. See the RSI consolidating at the downside after repeated down moves. Just this waterfall stair-step pattern down. And then all of a sudden we had this lower low and a higher low on the RSI. This was your bottom signal. And if that wasn't your signal, then this definitely was. See the RSI before and you see us establish a higher low for the first time, this was it. And even if you just played the swing for one swing at a time and then retested the 200 average, you could have grabbed profits here, re-entered here, take profit here, exit, go back in here, and then wait for the crossover, and you could have been long in the market going all the way out till the end of August. So that opportunity is presenting itself again for us to go long in the market. It's going to take some time, but the best way to make that trade happen for you is to be long in the market for the long term. Right now, I'm doing a very short-term day trade just because I'm looking at all the signs and I see some possibilities of a pullback. Maybe I'm wrong. Maybe I'm really wrong. Futures are still heading down. Futures are still heading down. The VIX is pulling back some more. Dixie got punched in the face here for a quick second. Interesting choice. Interesting choice for the market. There's some kind of a battle happening here. I've made my decision. I'm going to stay short for tonight. I'll look for my re-entry tomorrow. HYG is putting in higher lows though. So the bottom is pretty much here. It's looking really, really strong. We had one last low in the market where HYG decided that it was going to come down with the SPY, but the RSI is clearly turning bullish. Very clearly turning bullish. Even just from this candle to this one. Clearly putting in higher lows on the HYG. We know the HYG leads the bond market and it leads the SPY. Bullish divergence here and here.
There we go.
HYG is testing the ceiling of this bullish triangle once again. We have 8 minutes left in the market. 8 minutes. Okay.
Yep, saw that coming. It's been doing that all day.
I thought that it had broken the 200 average here on the 5-minute, but I guess there's just too much noise there. Can't really trust it.
Once we broke above that 366.26, then it was going to do this.
Good call.
No, Scully for not an analyst.
I'll show you what I had.
I see where I went wrong. I misdrew the wedge. It didn't actually close below the wedge. If I had been looking at the 15-minute chart, I wouldn't have jumped it. I jumped this trade a little bit too early.
There's a dash line that I drew. I'm sorry. There's the second dash line that I drew, TD.
Okay.
That's where I made my profits today, watching that line. Anything below it, I was getting out. Anything above it, I was staying in.
Okay.
$11 Fidelity transactions today involving the SPY.
Are you trading with a cash account or are you on margin?
Oh no, I'm playing cash only. No PTD for me.
That's honestly the way to go. You're never betting more than you can afford to lose that way.
Yeah, I just use a third of my account, or well, half of my account each day because they settle next day on options.
Gotcha. I'm tracking. It's so hard to decide with this chop in the market, man. Like every day with this shit, you know? Three minutes. HYG just can't seem to break this ascending triangle. Hey, Hugh. I have some very short dated puts against the SPY. Well, it's actually SPXU, but long term, I'm long on the SPY with UPRO going all the way out till December. My view of things is that the SPY has effectively hit its bottom, and even if I'm not perfectly on point with that, then that's fine with me. If I lose out on the puts, that's cool. But I'm holding on to that that short position just for the time being. In case there's a gap down tomorrow, I can quickly snag profits and then go long for the long term and average down on that long position because I didn't get a good entry on the long position. So I'm trying to be methodical about it and be as careful as I can. Anytime, homie. Could Lux Alert be shared backing SPY movements? Well, I don't have Lux Algo. I don't even have the terms of use or anything like that.
You need to get Queen and Echo back in line.
Are you trying to imply something?
Nope.
HYG just ain't doing it, man. It's just not doing it. It just can't seem to get over that level. Ding, 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 ding. That's the bell. You're locked into your decisions for the next 14 hours.
Not yet. I got 15 minutes.
Unless you're trading options on the SPY. What a ride today indeed. A third of all pizza ordered pre-pandemic was from Domino's Pizza, hence their performance. I actually kind of find that a little bit funny. All right, so SPY is distinctly printing a head and shoulders, so I'm confident in my short positions overnight. I still think it's going to. I still think that it's going to print low. I think we see a gap down tomorrow. The 10-year is coming up. Good call out. I love it when I see the 10-year surge. There it goes. Yeah, if the 10-year starts going crazy after hours, especially with Asian market open. Let's see, when does the Asian market open? Shanghai exchange time. When is that? Could you come on. Could they actually give it in a time zone? They just say 9 a.m. is when it opens, but they don't specify the actual time zone. I'll just assume that it's Shanghai time, so.
Ancient Chinese secret.
Mm-hmm. So it opens in 5 hours. So when the Shanghai exchange opens in 5 hours, I expect the bonds to go fucking crazy. Excuse my language, I'm sorry. I took off my filter today.
There goes the video.
There went the video a long time ago.
TD, thoughts on Nikola?
On Nikola?
For our dear friend Savvy.
Had a nice day. Only problem I see is it looks like it's trading an ascending wedge. This could just be part of the reversal pattern, though. Let's look at it on the daily chart. Very wicky. Very wicky indecision candle. And you had a bullish engulfing right after. What does the 2-hour look like? It's very wicky. It's trading above the 9. It just undercut this this descending wedge, which is kind of like my marker for meme stock plays. Whenever I see a descending wedge and then I see it get undercut for several days and then come back into the wedge, that's a bullish signal for me because it's a fake out breakdown. And that usually means that shorts are taking profit and covering their positions. The volume is increasing as well. I'm sorry, Persephone. I'm sorry that I can't save everybody. It's not like I did well today either. I actually did pretty poorly all around. But we got into some better positions to take on the reversal for next week. We just got to give it time. I like this FedEx play that Persephone had called out in the Discord not too long ago. Looking at FedEx for the week, I see some potential for the stock to fill this gap, especially if there's a big rally during the holidays. So there's some nice upside potential for this one that's got me a little bit excited, interested. The real money would be on some close to the money call options for, I'm thinking, December or January. And if FedEx switches up their guidance and indicates a improvement in their performance with this next earnings call, then that can turn things around pretty quickly. FedEx doesn't make moves like this very often. In fact, I would say that I have yet to ever see a gap down like this on this company. If I go all the way out to the daily, the only move that's on par with this is the big drop during the stock market crash in 2018. FedEx dropped when there was a huge liquidity crisis, and that wasn't because of anything wrong with the company. They actually published good earnings, and they filled the gap over the course of the next 5 months. But this was all because of a big collateral crisis on Wall Street. This had nothing to do with FedEx itself. Trying to go back even further and see if there's anything else that kind of sticks out. The bear market from 2008 was pretty brutal to it, but it had a nice recovery and formed a bear flag over the next month after it fell down in October. So we could see something similar to that from FedEx. Even if it doesn't fill the gap, I would expect a recovery of some kind over the next 3 months. So for me, this is just a simple matter of it got way oversold. So even if you trade a bear flag on this thing, you could see a return to maybe halfway up the gap. But with this being such a big gap with no volume trading in it for so long, like, come on. That was too much of a sell-off. 20% in a single day? That doesn't compute. Not for a company as big as FedEx. Let's see what else we got. We recovered a little bit at the end of the day trading the SPY. We flipped around, went long in the SPY. I wouldn't have lost so much if I hadn't been messing around. For those that missed it during the day, I lost a trade against the SPY, and I'm like, no, this is stupid. I'm gonna trade against the SPY just to be contrarian, and I threw $5,000 in my paper account, just my paper account, not real money, okay, but just the paper account. I threw the $5,000 against it to be funny, and it stopped me out again, like almost right away, and I'm like, oh, well, I guess the market is very efficient. If I had been looking for the signs and not been messing around, probably wouldn't have made that mistake, but it's okay. This is for fun. The clock is broken. Ah, good call. Yeah, that happens sometimes. I'm not sure why it does that. There we go. Clock fixed. Yeah, I don't know why it does that sometimes, but every now and then the clock freezes and I have to just tell it to refresh the page. Those that are missing out on the Discord chit chat back and forth. The gif of the South Park banker from Goldman Sachs. Like, we'll just invest your money into a money market fund and it's gone.
They need to join the Discord.
Now, the other thing with FedEx is that you're clearly in a take profit area for any short positions on the PPO. If you look at FedEx here, this crossover happened several days ago. Whoops. Here we go. So this has been trading in a range-bound channel right here, and it's just coiling. Very clear coiling. And the PPO has been going green consistently as the price starts to recover. And now the volume is consolidated and it's still quite high. The volume on down moves is dropping, while on up moves it is increasing. So I would say that this gap down is likely to be short-lived. We've seen moves like this in companies like Dollar Tree as well. Very interestingly, Dollar Tree just had a gap down back in May, and it dropped 15% over from one day close to the next day's close. And then beginning of next week, it went straight back up to where it was before, like nothing happened. It was back up 20%. So, and that was just because of earnings. Like, I don't know what it was. Maybe a really big institution was like, I don't know, Dollar Tree seems like it's a bad investment during a recession. I don't know why they thought that, but they thought that, and they dropped all their shares out of Dollar Tree at their own expense. And then they realized that it was good earnings, and they were like, oh, never mind, buy it back, buy it back. And it just came right back. So maybe we'll see something like that in FedEx as well. This isn't the first time. Dollar General actually did something very similar also. Dollar General made one of these islands. It's a bullish island pattern. Sudden gap down, wait a few days, sudden gap up, back to where it was, and it just kept going from there. So, yeah, I don't know. I'll just blame it on Warren Buffett being indecisive. It's easier to blame. It's easier to blame Warren Buffett. He's got money like that. J.P. Morgan was the real rug pull right here. Big expectations for its earnings tomorrow morning. And speaking of earnings, it is getting into earnings season. We are due for Q3 earnings, and now things are going to get especially volatile and frickin' crazy. So earnings compression, which Michael Burry warned about, has been due to hit Q3. I was paying attention because Michael Burry is very frequently right when no one thinks he will be. And I don't know if anybody else noticed, but Netflix has made this gigundous bear flag. I have a feeling that upon the epic conclusion of Netflix's earnings, that we're going to see a pretty spectacular drop in their stock after we get through this next cycle. But we may see it pull up. Who knows? But I can tell you one thing, is that if you are undecided on any stock, especially if it's in the top 10 of the SPY, consider straddles. Because it doesn't matter if you are bullish or bearish on the stock, you can't really be wrong as long as it doesn't do nothing. So provided that Netflix does not stay exactly where it is for a full solid week following its earnings, no reason not to take the trade. It would be an expensive trade, just to point that out. Like, it's not like that's cheap. That is an expensive trade. But I'm just pointing out that if you're uncertain whether Netflix will do good or bad, you can give yourself a pretty decent shot at being successful just by betting on a straddle right before earnings. And if it goes up, great. If it goes down, great. Take profit. Let's see, what was that scrap? I see 5 trends to track this earnings season with 5 action points, and yes, inflation is one. Market Watch's guide to where and how to see the numbers that really matter. Inflation, supply chain snags, strong dollar, and consumer spending are all expected to feature prominently in releases and on conference calls with analysts, along with evidence of slowing demand that's already showing up in profit and revenue warnings in recent weeks. Also, chip stocks could suffer the worst year ever as effects of shortage turned glut spread. The overall season is expected to show per-share earnings growth for the S&P 500 of just 2.4% compared with the year earlier period, but that number would drop to a 4% decline if it weren't for the energy sector, which has outperformed all year amid strong oil and gas prices and record profits for energy companies. That was already the case in the second quarter, excluding energy. Interesting. Oh, I like that little addition. Even during recession and wars, people went to the movies to escape reality. Well, thank you for pointing me back to that that little article. That was helpful. Hey, Rizzler, congrats on the successful trade on Netflix. Getting in, getting out, up in profit. Always good. Always very good. I was thinking of shorting NVIDIA, and I exited that at a slight loss. I didn't wait for it to hit my stop loss because I saw where it was going. NVIDIA is looking pretty strong. It does look as though it has found a bottom. The RSI has been getting stronger and stronger on the 15-minute, and the 1 hour has printed its first bullish divergence. And the daily has printed its first bullish divergence, and it's going to print another one here after today's close. So for me, NVIDIA is obviously a long trade. The only issue I see is that it has been pointed out that semiconductors are in a really awkward position, what with Taiwan and China. So we'll have to keep a close eye on that. But NVIDIA has undercut this descending wedge, and it looks as though it is going to re-enter it. So that is worth taking note of. If NVIDIA decides it's going to re-enter this wedge, then it's within reason to expect it to retest the top of this wedge. And if it does end up doing that, then NVIDIA is probably going to see a return back to $140 or even $145, depending on how earnings go. That's going to be hitting in November. So I'm watching NVIDIA closely. It has still closed below this wedge. So if it re-enters it with strong volume and momentum, then I'll be looking to add a long position on NVIDIA to go ahead and catch it for a return to the upside. Its earnings were just absolutely terrible this last quarter. Is the Nikola CEO still the guy that bought a farm? Don't know, actually. Thanks, Tony Smith. That's prime advertising right there. Appreciate that. Get gifts as a bonus, and of course, logical chaos yelling. Where would we be without the zebra constantly screaming? Any news on the Revlon delisting hearing? I don't think there's any news on the Revlon delisting hearing, but I do know that the lenders were denied an appeal to put Revlon on the hook for its bank error with Citibank. The bank error ended in favor of Revlon, citing that they actually had paid off a good portion of their debt, and the lenders were appealing that, saying that there was some mistake. But that was denied in court, so that's good for Revlon. It means that they don't have to pay money back that they already paid. Somebody was just being greedy. Can I clarify when I say market bottom? Do I mean short term or long term or this year? I mean for this year. For this year, I'm talking about a market bottom until December, until the end of December. Then next year, I expect another downturn. The market is still not in good shape. Like, we are still squarely in a bear market. There is no mistaking it. What I am looking at, however, is that the SPY is trading in a megaphone pattern, right? And let me take away all those stupid arrows again. Okay. So I'm not going to go and drag all the way back to the bear market of 2008, but just trust me. This is a big trust me, bro. When 2008 had printed its last big drop before the big drop, there was a lower low in the market, and it actually happened in it was at the end of March in 2008 when the market had hit this bottom compared to where ours was, and it ripped up until June of that year. And then from June onward, it entered into this sell-off similar to what we experienced in this past August through September and early October. And at the end of that, it printed a lower low at the end of July and early August. Then, for August to September, it went on this really tiny rally. And it went on for about 3 months. So for us, if we were to make the same move, it would look something like this. And it would go out till the end of the year before the big drop. And this is a very rough estimate. This isn't a to scale map like I've been doing with others. You can check out some of my previous videos on comparing the SPY to the 2008 financial crisis, but these are the moves that I'm tracking, and we're in a seasonal market. Our market is very seasonal. Right now, we have been trading in a seasonal bear market based on how stocks perform, how they tend to perform during a midterm election year cycle with a Democratic president in his second year of his presidency. All of that is to say that we've had President Biden in for 2 years, and we're due for a midterm election with a whole bunch of Democrats up for re-election. With those conditions in mind, the market tends to trade very negatively all the way from late August until the very end of September. We get a rally in the beginning of October, and then we get another sell-off, a very small sell-off in October where we retest lows. Back in 2008, we had very similar seasonality, but for different reasons. It was a Republican president. It was a election year it was a presidential election year, very different conditions. So the seasonality changed drastically. So we have to bear all of that in mind, but bearing all that in mind, we are on track for a seasonal rally in the SPY where we see ourselves back trading up at around like 380 or so. Maybe 390. It's a bit of a stretch. We don't know, but I don't think we retest this high. At the most we can hope for is to touch the top of this megaphone. That would put us at like $400 per share on the SPY at most. And that would be a really tough sale. Like you'd really have to work out some seriously good due diligence to convince me the market is going back to 400 this year. But that being said, it's out there. The technicals say it's there. It is possible. But just based on the global financial crisis and the conditions of the time, our market will do something like this. And then it will start to peter out by January, and then from January until April, May, it's going to be sell all the way down. And at some point, when we hit this final leg of support, which this is a mathematically calculated number, this is based on technicals as well, where our market saw a huge gap down and a huge gap up back here during the COVID crash. If we retest this level, if we at any point go back to 330 and break this level, then we are going back down to sub $300 on the market. And this is where I think the final market bottom is. It's somewhere in this area. It could be here at around 300, or it could be way down here for all we know. We're not going to know where the market bottom is until it's already several months behind us. But these are areas that I am looking for the final market bottom for this entire bear market. And this bear market is still young. That's what people don't realize. We've only been in this bear market for 8 months. We've been in this bear market for 8 months. 10 months if you want to count like the rest of this month and like from like the very first day of January. But technically, we've only been in a bear market, or what qualifies as a bear market, since February. So February, the bear market's been going on for eight and a half months. All that being said, bear markets take a while. Most of them go on for a year. Some of them go on for a year and a half, like 2008. The great financial crisis was one of the longest running bear markets of our time. The last time we saw a bear market that bad was at the tail end of the 70s going into the 1980s. And we had a bear market for like 3 years. Before that, there was 1929, all the way through 1933. And that was the Great Depression. I'm worried that that's kind of what we're looking forward to. So that's my big concern. So anyway, just speaking broadly about where I see the market going, this is what I mean when I say the final bottom. When I'm talking about this bottom, when I say this bottom, that's this year for 2022. When I say the bottom, I mean for like 2025. The court of Brazil has fined Apple and orders them to sell the iPhone with a charger, per Reuters.
Brazil has a court.
Apparently. Oh, I don't know if you guys heard about this. I just remembered. My I was informed yesterday that that Brazil's one of their presidential candidates is promising to conserve the rainforest, the Amazon, if elected. He'll reinstate the conservation, the ecological conservation funds and institutions from the government. So I need to check which what this gentleman's name is, but Lord, I am praying, because the last goddamn thing we need is for the rainforest to burn down and for us to lose like 30% of our oxygen generating capacity for the planet. That's not an exaggeration. Well, it might be a little exaggeration. I think it's like more like 20%, but it's a lot of oxygen that comes out of the Amazon. They don't call it the lungs of the planet for a reason. And Brazil has just been hacking, slashing, and burning for the last, like 15 years, making avocado and cattle farms.
There went the neighborhoods.
Mm-hmm. So, not looking forward to that. I really hope that this guy doesn't like just mysteriously disappear. But anyway. So, checking in on our current market state. I'm about to head out and close the stream. I'm just trying to think if there's anything else that I need to go over with folks, because we got a lot going on. Like there's so much going on this past week. Okay. AMC closed back above $6 today. Ape AMC combined closed at $7.86. Bed Bath & Beyond is still putting in lows. BBIG had a nice end-of-day pop again. Luis Ignacio Lula da Silva. Okay, so the Honorable Mr. da Silva. Hopefully Luis is able to carry home the vote. Just the decision to protect the Amazon gives me, he gets full support from me. Big thumbs up. I really hope he does it. Let me think. Is there anything else? Anything else? Well, you guys let me know if there's anything else that you want to me to go over. I'll give exactly 15 seconds for you to respond. First come, first serve. What are the best time frames to use for evening and morning stars? Depends on how you like to trade, but generally you want to be trading with the trend. And if you're trading an evening star or a morning star, say you're in a bull trend, if the market is going up, you want to be looking for morning stars. So when you see a pullback, you look for morning stars, and it can be on any time frame. It doesn't have to be a specific time frame. It just depends on how you want to trade. If you want to scalp the 5 minute, then that's fine. You just look to take those trades on the 5 minute, and you're looking for reversals or bounces off of critical points of support. If you're in a downtrend, a bearish market, and you're trading below your moving averages, then you look for the rips up and you look for evening stars at the top of that market on those big pulls back to the upside. And then you go short when you see those evening stars print. And again, doesn't matter what market you're trading in, it works on all time frames. Like for instance, here was an evening star right here on the 2 hour. This literally signaled the top of the market on the 2 hour on August the 16th. And this is on a 2 hour chart. If I drop down to a 5 minute, I'm willing to bet you I find an evening star here in like about 5 seconds. That's a tweezer top. Nope, nope, nope. Here we go. Here's an evening star. There you go. You had a big rip up, and then you have this evening star right there. You crossed above your 200 moving average, and that evening star told you what you needed to know. If you weren't convinced, then this evening star told you the rest. And I bet you if you look at this on a 30-minute chart, it'll show up the same exact way. Okay, so it's an inverted bull hammer instead. But this one, you have an evening star right here. Nah, inverted bull hammer again. But that's how you want to use those patterns. You want to use those patterns as a confirmation for your trend trade. You do want to be trading with the trend for the most part. Trend reversals are very hard to do. You're going to have a really hard time playing those trend reversals to your advantage. It's much easier to see that we're in a down market. We're trading below our moving averages. And just for instance, like right here, we're still trading below our 100 moving average. We have all these moving averages converging. And look at how we ended today. Here's an evening star. We're in a bearish market still. We're in a downtrend. This is a perfect evening star to take a trade to the downside, and nobody would fault you for this. No one would say that that's a bad trade. Even if you're taking into consideration the macroeconomic events, just look at how far the RSI has ripped today. It went crazy. The market went straight up for a whole day. And it was like trading way down on bad news. This, for all intents and purposes, to me, looks like a very good evening star top. So I wouldn't fault you in the slightest if you took that trade. And for that matter, you look for the same thing with like gravestones like this one or dragonfly. I think it is a dragonfly. If there was no bottom wick, it would be a gravestone. That's the only difference between the two. But anyway, hopefully that helps. Camp. I don't want to go into a deep technical analysis right now. How do citizens with global events manage until a depression for half a year more? Not well, I can tell you. The Great Depression went on for 4 years. Actually, it went on for like 8 years, but we started recovering after 4 years. And the only reason that we did was because of the introduction of social programs that propped up the working class. Without those decisions, if President Roosevelt hadn't taken over and started, like if he didn't create the Brand New Deal Act, or the Housing Affordability Act of 1933, never would have gotten out of the Great Depression as quickly as we did. It would have taken a lot longer, maybe decades. The whole reason why we got out of that whole situation is because we propped up the working class to begin participating in the economy again. And it had to come on the backs of the wealthy taxpayers because they were the only ones that were doing well still. The problem is that a lot of them got wiped out in the stock market crash. So literally the only ones with money were those who were investing in government bonds and who put all their money in safe havens like commodities. And that was way back in the day in the 1920s, 1930s. So for the most part, the only people that did well were actually crime lords. Crime lords were the ones that were doing well because they were propping up the working class. Crime lords actually participated in their communities and protected people during the Prohibition Act. You think of Al Capone. That guy got famous as a mobster because he was basically the Robin Hood of his time, protecting working class citizens, donating money to the poor, paying for workhouses and soup kitchens and stuff so that they could protect people and give them some place to go, shelters and stuff. That's what he did. And that's why he was so well loved at the time. Not a lot of people know this, but Al Capone, who was one of the most notorious murderous gangsters out there, was also one of the most well-loved and well-respected members of society of the time. And it was all because he was helping protect the working class and keep them alive. And because of that, they protected him from the government and the Pinkertons for a long time. Yep. Yeah, Tempestuous Persephone in the Discord's already got it. Al Capone ran a soup kitchen during the Great Depression. Yep. The guy was a local hero. He was a hero. And it's ironic that people like him helped save the economy and he helped save working class people. And because of that, they protected him. I hope that we don't go back to that kind of an era, but it's not all black and white. Like none of it is. It's not all black and white. Sometimes civil disobedience is one of the healthiest things for a society in a time where nobody is being treated fairly and you have the elite stomping down on the little guy constantly. That's the whole reason why the French Revolution happened too. Like the French Revolution was a product of decades, generational hatred of the elite in France because they lived so opulently and because they lived on the backs of the working class and never gave them anything for it. And eventually it got to be too much when they couldn't squeeze them anymore. Eventually people don't have anything left to take. And that's how people come. Sometimes people come out of depressions, economic or otherwise, through just drastic actions by the government to create economic equality, or it comes at the end of a sword by the people when you give them no choice. So that's the balance. There's no way we come out of this thing unscathed either way. Somebody has to lose. But it's up to It's up to our government and it's up to the populace to decide how we're going to do it. And if the government doesn't do something, if the Fed doesn't do something, if we don't take control of this economic situation, the responsible, the civil, and the socially acceptable way, then eventually people will get fed up and we're going to take care of things the old-fashioned way. And I don't want to see that happen. Nobody does. But eventually, no, there won't be any alternatives left. I think that that's a good time to leave the stream and close things down. I appreciate everybody for attending the stream. I hope that I was able to help give you some good information, things to look for to help you navigate the market. It's been a really, really, really crazy week. This one was full of rug pulls all over the place, but we're gonna come back at it tomorrow and try to hit on all cylinders. But until then, you guys have a good night.